What's going on, bro?
Can you put a volume on?
Oh, yeah. What's going on, bro? Hey, what's going on, bro?
Extremely awkward moment at Market Mondays. We log in and we see somebody's in our house and he has his volume off, so we can't even have a conversation with him.
You got a nice shirt on, though.
We cannot hear you. Extremely awkward moment at Market Mondays. We log in and we see
what's the feedback. He's hearing it to us.
Matthew Garland, we can see you.
You gotta take the camera off it. Sorry, that's Tokes. Blame Tokes.
Surprise, he's here. What's going on, bro?
Can you still see me?
Yep. We can see you and we can hear you. So be mindful of that.
Please.
YouTube, what's going on? Yes. This is a very eventful moment. We Matthew Garland kidnapped Market Mondays.
Yeah.
We might as well get started. No slides. Let's get right to it, Matt. How you doing, brother? Everybody on YouTube, what up? Trevor Shaw, what up?
What's the deal?
I ain't even get to kick it with y'all for like 3 minutes Wednesday.
Yo, as soon as you walk down the steps, man,
they held you.
They had me surrounded.
Yo, it was.
Thought I did something wrong. I was like, whoo.
It was
Thank
amazing.
God I was solid.
I saw you walk in. I said, "Oh, they gonna get him," and they sure enough did. They let you come down them steps, bro.
They haven't seen Ian really ever. Really, a lot of people have never seen Ian, so it was the first time that a lot of people got to see him, and they made the most of that opportunity. So they definitely held them hostage in that corner for like 2.5.
For real. I'm like, dang, they gonna think I'm rude. I ain't get to see how to nobody for like 2 hours, but I had a blast.
And I appreciate you for coming, man. That was a legendary, very legendary situation. For anybody that doesn't know what we're talking about, we had a private networking event for EY University in Atlanta, and everybody came out. I don't want to forget anybody's name, but Ian, MG, the Mortgage Guy, Wall Street Trapper, him 500, Alex Good Energy, Matty Jace, Dave Shands, Ash Cash,
Snoop. I didn't even get a chance to meet her, but
shout out to Snoop.
Yeah.
2 weeks out.
Ladoon,
Josh Chris.
Yeah.
There was so many people there, man. It was my
Ken.
boy. Yep.
Okay.
Quiana Watson, of course.
Quiana went out. Yeah.
My boy Chad from 85 South.
Shout out Chad.
You say Neo?
Nehemiah Davis. It was crazy, man. Like
Doug.
And the energy was so good too.
That stage got filled quick. Oh, shout out to Freedom, Georgia, Ashley and Greg were in the house too.
They was there. Like I said, it was crazy, man. Shout out to my man Chad. He said, I gotta give y'all credit. I never saw Atlanta like this before. Like, just packed, but people making plays. Like people came together to make plays, exchanging phone numbers.
It's powerful.
Guys, ladies.
Yeah.
The vibe was right. It was a right
dope
vibe.
too was that I watched alumni meet alumni for the first time. So I actually watched Ashley, who's been admiring Quiana Watson for months, maybe.
It was so dope
to meet for the first time. It was dope to see that happen.
And Ian met Wall Street Trapper for the first time too.
Yeah, man. I probably hugged Trap like 9 times. Yeah, I appreciate it.
I saw that moment. I'm like, oh wow, this is
it was first time.
Yeah.
Crazy. Josh is from the same region I'm from too.
Oh, Josh.
I don't know he was from Indiana. I was like, what?
Yeah. So, he lives in Texas also, I think.
Yep.
Yeah, I think he lives in Texas.
Somewhere near a golf course.
Yeah. Shout out to Josh.
Josh, hit me up, man.
Yeah, man. So that was dope. Yeah. As soon as we get that footage, we're gonna put it out there. But thank you for everybody that came, alumni, and thank you for everybody that came, all the earners. And shout out to the establishment too, Black-owned establishment.
Yeah.
What was the name
Slush.
of it?
Slush. Yeah, it was fun.
Edgewood. Really good food, good drinks.
Yeah, we were back in Edgewood again.
Shout out to Edgewood.
Yeah.
Edgewood's popping.
Edgewood.
Yeah. So shout out to Atlanta, man. We had a great time out there. And then of course we went to Detroit after.
Right after.
Shout out to Inception. Dopest mental health podcast in the game on EYL Network. We took a tour of their facility and tried everything. So shout out to Elizabeth, shout out to David, shout out to the whole team. And shout out to everybody in Detroit, man. Shout out to our boy Ken. He
Solid.
rolled out the red carpet for us, man.
I like anything you've seen.
Took us around. Yeah, shout out to Asia.
Yeah,
Jay.
And of course.
Yeah.
King of Detroit.
Yeah. Shout out to my boy Chill, man. Shout out to my boy Chill. He showed us a lot of love out there.
Shout out with them dudes too, though.
Yeah.
Shout out to them.
That's what I'm saying. Shout out to Chill. He put me on the phone with his dad, Southwest T. Got to speak with him on FaceTime. Big supporter. I didn't know he was a big supporter of Earn Your Leisure, man. Big supporter of everything we got going on. So
shout out him and Duke.
Yeah. You know what else was in Detroit? Oh, it's the home of Ally Financial. So our hotel was right across the street.
That's a fact.
So that's a great segue.
Yeah. Shout out to Ally Financial. This episode of Market Mondays is brought to you by Ally Financial. Ally is an option if you're looking for a bank to invest. Ally is a leading digital financial service company with passionate customer service and innovative financial solutions. They are relentlessly focused on doing it right. Doing it right, y'all. Don't let that go over your head. And being trusted financial service provider for both customers and communities. Get with Ally to make the most of your money so you can save, invest, and spend on the things that matter to you. Shout out to Ally Financial.
Shout out to Ally. Shout out to Bravo. Shout out to Bravo too.
Yeah.
Showed us love out there. We got a lot of love in Detroit. Man.
He said we 1,000% Detroit stamped.
He said we Detroit stamped 1,000%. So
Detroit, a great city. Midwest is a beautiful place, man.
You want to tell them the new slogan?
What's that?
This ain't your average podcast.
Oh, no.
This ain't your average podcast.
In the trap, hanging places that you can't go.
Kudos to my guy, Wayne Blaze.
That's a fact.
This ain't an average podcast.
Go on place. Oh, shout out to Big Facts Podcast, by the way.
That's dropping tonight.
Yeah. Shout out to Big Facts Podcast. We did that, and on the fly, we just so happened we was with him 500 in Trap, and they pulled up with us, and they knew who they was when they came. So shout out to Big Facts, man. Shout out to my boy DJ Scream, Baby J, and of course Big Bank.
Big Bank.
Yeah.
You know what I'm saying, man?
I heard a lot about him. Yeah.
You know what I'm saying, man?
Heavy in the South, man. Heavily respected. Really doing their thing, man. So check that out for sure. So yeah, let's get this going. We got a dope episode coming out tomorrow. Shout out to Francis and Quay. They have a fintech company called Chico. So that episode comes out tomorrow at 8:00. We're going to talk about technical analysis, but it's more than just investing conversation. They want to take their company public. So we had a whole conversation about taking a company public, the steps for that, why there's only 12 Black companies on the stock market, and there's 4,000 companies listed on the stock market. A conversation that we need to start having more of outside of just investing. Investing is extremely important, but we need to start thinking about taking companies public and being in on that side of the game. So that's a very powerful conversation. Comes out tomorrow at 8:00 Eastern Standard Time, YouTube and all podcast audio outlets. And then, of course, EYL University. This week, we have our group chat call where it's me, Troy, and then we bring friends in. We'll probably bring Francis in and Quay actually this week, and we'll go over we might even bring the president of our crypto.
Yeah, shout out to Alistair, man.
Yeah.
Yo, listen, I'm glad you said that. Shout out to everybody that was in that book club yesterday. That was a powerful session. Shout out to Arthur, shout out to Janet, of course. Alistair one was going off. And so Friday, the crypto club meets, but I might have to give him a call. He might have to come into the group chat. We might have to add him to the group chat.
Yeah.
He's super knowledgeable.
Yeah.
Shout out to him.
And Saturday, I got my financial planning call.
That's a fact.
So if you guys are interested, EYLUniversity.com. Sign up and become an earner. All right, Ian. Floor is yours.
Make some magic happen.
All
right. Trading has considerable risk. Please consult your advisor. Only invest. Do not copy any of my content. Do not reproduce. Please, I'm begging you in advance. Namaste.
All right, Ian. So before you start, do your own research, y'all. Our content is intended to be used and must be used for informational purposes only. It is very important to do your own analysis before making any investment based on your own personal circumstances. You should take independent financial advice from a professional in connection with or independently research and verify any information that you find on our show and wish to rely upon, whether for the purpose of making an investment decision or otherwise. This is a message brought to you by the good brothers at Earn Your Leisure and the good brother Ian Dunlap, the Master Investor. Do your homework, do your research. And when you do that, do it again, double check.
Facts. And execute. That's the most important thing. Some of y'all been fumbling in the bag, not executing. Can you guys see my screen?
Yes, sir.
Yeah.
All right, Bill, let's get to it. Everybody write this in chat. There is no secret. just systems and hard work. We're going to start there. There is no secret because we give every secret out on here for you, just systems and hard work. So subscribe to my YouTube for exclusive content. You guys know the vibe. The Red Panda Crypto Club will not be available again to June 1st. For those of you who saw them prices hit this weekend, drop some fire emojis. If you saw that Bitcoin or Ethereum price, I know some of you thought I only knew about stocks. Set the trap just to see do react and now. So just be careful when looking for advice. But if these picks helped you in the last couple days, put yes in chat. And I made the decision to make all the programs be premium programs. I'm going to take in less people so I can give more time to the members. So that'll be starting next week. Let's go.
Connection is a spark that gives our lives meaning. It drives us to seek out others who feel the same way.
Okay, why don't you input the data and we'll take a look together. Hey, Mari, what you got for me?
To find those who share our views, yet offer different perspectives.
So this net. Look over here.
Challenge us with new ways of seeing.
That I think we should.
Deepen our understanding. And enrich our lives.
最后一笔的时候，往前。
Great things happen when we commit to something bigger than ourselves.
Let's take a closer look at it.
Place this here. Let's see how we go from there, okay?
This sense of collaboration and the feelings of connection it brings excites us.
Hey, just in time. I'm gonna move it slightly, okay?
It's yours, take it.
We have 2 planes right now on the same trajectory.
As we put people first, technology fades into the background and feels like anything but.
Aisha, what do you think?
I think if we had 330, maintaining 2800, we'll be clear for approach.
Excellent.
This changes the way we see the world, and in turn, changes the world we see.
These numbers are looking great, actually.
There's promise in the possibilities, and what we see and create next will stretch the imagination.
Good morning, Sarah.
Morning.
Slowly coming towards the thumb.
A world without boundaries.
Good job. A lot better than yesterday.
Yeah.
Excellent. Slowly bring the
A
arm
world
down.
where technology enhances, not limits, humanity. With people front, center, and in the spotlight. The future is here. And here can be anywhere. Introducing Microsoft Mesh.
So what if they took that technology and applied it to hospitals or cancer research or genomics? Would they have a competitive edge? Yes or no? I put this on IG this weekend. I'm gonna keep it clean, but ladies, let's make a requirement for all men to watch every episode of Market Mondays. I know a lot of you have been asking for scholarships. I know some of you are new. Here's a secret. All of the stocks that I've ever put in Stock Club are in the episode spread out like little breadcrumbs and diamonds for you to find. So ladies, I want you to tap your man on the shoulder. Tell him right now, your homework is to watch every episode of Market Mondays and take notes. What's the biggest mistake that you've ever made in investing? Please put it in chat. Please put it in chat. I answered this the other day, and this is for those of you that have huge hearts. One of my biggest mistakes is giving too much. And the truth is, like, you can give your way into poverty. You can help others so much that your cup will be empty. And kudos to Matt. When I flew back to Atlanta with Xander, as soon as I came in, it was like 11:30, and Matt and his wife was at the bar. And one of the things she was saying was like, listen, you can keep pouring into other people, but then not have anything left for yourself. You have to guard yourself and protect yourself. So for those of you with big hearts, and you can give, and that can be another version of spending. So you may not spend it on Louis bags or Gucci bags or diamonds, but you can give away so much that it ends up hurting your net worth. So for my givers, I need you to know this. You have to set a percentage of what you will give and stop there. If you have an exceptionally big heart, please put the percentage in chat that you're going to give away per year to help others, and don't exceed that. Because some of us may be savers and be very thrifty in certain areas, but we can overgive helping others, and then it's no different than giving all our money away to a company. So please be mindful of that. You know, I love Elon, but Elon's turned to the crypto killer. So I saw this tweet and I thought it was pretty interesting. And it said Bitcoiners are going to slap themselves next quarter when they find out Tesla's dumping all of their Bitcoin holdings. And Tesla said, indeed. Listen, I love Elon. I don't know how he's able to get away with some of the things that, well, cryptocurrencies are not regulated in the same way that securities are. So that's part of the reason why. I told the stock club members earlier before we got on, he's in a very interesting situation with China, where China is now trying to control him and Tesla. And he began dumping an asset that he was using to hedge to then get into another asset where he doesn't have much control. We've seen this with Jack Ma, and China is a very dictatorial regime, as is the United States, but they are a little bit tougher than we are. So part of the reason why he is starting to dump Bitcoin is because some of the issues that he is facing in China and the sales of the cars, because he already promised that Tesla was going to have a significant impact. And now he's starting to realize that may not have been the best move there. Michael Burry of The Big Short, a book that I mentioned earlier, has 800,000 Tesla put options in the first quarter worth 534 million. For those of you who do not know, Michael Burry is the person that called the housing crash and betted heavily on it. Homework for tonight. I need you to go look and see when he began placing these shorts on Tesla, and then correlate that on a chart to see what price he got in. If you do that, you can start to reverse engineer and see based off a percentage basis when he is looking to get into his position. A key lesson for everyone here: you have to listen to the contrarian opinions of the greats. So whenever this happens, people are gonna be like, no, Tesla's gonna go up. I'm not saying Tesla's not gonna go back up, but remember a few months ago, I told you they were gonna start to hit some issues once they hit those highs. And then if Kathy gets attacked, which she has, and then all the funds begin to dwindle down her fund and squeeze her, the assets in her holdings are going to take a hit as well. And that's what we're starting to see here. And Michael Burry is taking advantage of that as well. A lot of you have been asking us, what's up with tech? Nothing's up with tech. You're just not going to get an easy 80% or 200% this year. We're going to be back to the normal 12 to 18%, maybe 23% in a great company. Write this down. Focus on companies with the lowest drawdown. Focus on companies with the lowest drawdown. Mike Novogratz came on here a few weeks ago and told us that minimization of risk is everything. And I know it's much more fun to get 110% gain than focus on a company that's only going to draw down 8% for the year. But you have to look at it. Defense wins championships, especially when it comes to investing. And this week, my guy Pete had asked me, he's like, hey, are you a believer in crypto? My stance is still the same. I want to be on the record. I still hate it, but I still am invested in it. The only crypto holding I am in right now is in Bitcoin. And I've had that position for a few years. Kayla came on here and told you guys about Cardano. Cardano hit an all-time high. And while other cryptos were getting torn apart, Cardano was doing incredibly well. So please be mindful of that. Now, write this down. There is a cycle that you'll see. So when negativity is spread, it's often to free up shares of the asset. So if I come to you and say, hey man, don't invest in Wingstop or McDonald's, because I don't know, you know, people are leaning towards eating healthy. Don't invest in it. You will see the same thing in crypto, real estate, investing, and people are often doing that. And when there's a concerted effort all at one time, when everyone is blasting one asset, it's usually because other companies or institutions are trying to get the assets for themselves. This is like investing's version of dry snitching. Like they want to keep you away from certain things to then take advantage of it. And then watch how in 2 or 3 months, these assets will go back up, the same ones in which people are telling you not to invest in. So be mindful. 2023, investing is going to be a little bit more difficult if interest rates go up. And here's a cycle that for those of us that are veteran investors, we're going to see again. Banks are now going to extend loans to customers with no credit. I'm going to tell you what's going to happen. They're going to chop up these assets and put them in tranches again and sell them off to Wall Street. And when everything falls apart, guess who they're going to blame? The people who were underbanked and had no credit. And they're going to blame them for the crash while profiting on the upside of giving the loans and shorting the downside and being the ones who tell the government what to do to get out of the bailout. I've been told that 2027 is when we're going to have our next big crash. 2023 is going to be a smaller crash. And I said Square is the new JP Morgan. JP Morgan is behind this trend or leading this trend, but there's 53 million people who do not have a credit score or they are underbanked. They are looking at that as a huge market. But I want you to see the game inside of the game and understand what's going to happen. JP Morgan is leading the charge. I want you to go look at the next 3 or 4 big banks that are going to be involved in this. So when we have a crash in 2027, you may be able to pick up those assets for cheap. Now, when 19 Keys was on, we talked about HoloLens and everything they have. In the beginning, I showed you Microsoft Mesh. This really caught me by surprise. Microsoft has created the first digital DNA hard drive. Let me say it again. They have created the first digital DNA hard drive. We are getting into some fantasy land, scary-ish. And they're going to use it to store and retrieve data. So it stores information in synthetic DNA molecules that are created in the laboratory. So if they have Azure, which is cloud-based, competitor to AWS, and then they start to store all the DNA, put in chat, if they can sequence the DNA to understand what can happen, what industries could they be involved in? We're getting involved into scary territory, but I think Microsoft's plan, and I've been telling you guys for 2 years, Microsoft is going to be able to get into healthcare. If Microsoft can crack the code for cancer and genetic sequencing, because a lot of the genome companies don't have any profit and the revenue is not as strong as it should, this could be their move into the next 10, 15 years, which gives them a lot more livelihood in life. It's a key lesson. The companies with the most capital and best technological advantage will control the future. So I like NEO, right? NEO is solid. Not the best company, but they don't have an advantage over Tesla. There are some tech companies that I like. They don't have more capital than Microsoft and Apple. This will be the next frontier. Healthcare is one of the most important spaces, and you're going to see them make an aggressive push into there over the next few years. I want to give a kudos to my guy, Shabazz. So I was walking up the stairs. I hugged Trap again for the 15th time, and Matt was like, yo, come over to the bar, get a drink. Kudos to the dream team. It was me, Pierre, Dom, Lindsay. We were walking out, and this guy grabbed me. He was like, man, I just want to holler at you real quick. I was like, man, what's up? How can I help? He was like, man, I just made $31,000 today, that Wednesday, trading gold futures. I was like, what? I want to put all his business out, but he was like, yo, this is not my first time. This is my 3rd time doing it. So for all of you, I gave a setting last week on last week's episode. Trading has considerable risk. The brother put in a lot of work, but I want to use this as a moment of inspiration. There's a lot of money that can be made in these markets. And I'll say this too, for those of you that may be crypto enthusiasts or huge on it, the settings that I've given you, the 72, the 20, 200-day moving average, 150, if you use a 33 moving average as well, you can use that same setup and use it on TradingView or Coinbase Pro to then get into your crypto spaces. We'll talk about it with Matt. You can also use Fibonacci retracements to then dictate when you're going to get into your real estate prices. But I want to give a quick shout out to Shabazz for knocking us out and making 31 grand on futures. Everybody show him love and say great job in chat. So for all of you that love Bitcoin, it's like, yo, it's going to be a decentralized platform. Look at this. 2.14% of accounts own 94% of Bitcoin. So all this, hey, we're going to get off the dollar and we're going to transfer to Bitcoin, the digital currencies. And there was talks even maybe 10 years about the Monero being the dominant force. Listen, 65% of Bitcoin mining is done in China, 7.24% in the US, 6.9% in Russia, 6.17% in Kazakhstan. The rich own most of the Bitcoin. So if they have controlled the dollar and they've controlled all currencies and all commodities, why do you think that they are going to let us control a currency for the first time in history. The game is always the same. They are using us and the media to get us in. So if they need to be able to liquidate at any time, the same way Elon did, there's enough liquidity there where there is not excessive slippage if you own 800,000 coins. At one point, we got to get the Winklevoss twins in because without them, there would be no institutional backing for Bitcoin. They created that blueprint. But they use us retail traders for liquidity. Please be mindful of that. And if Bitcoin were a country, it would be a top 30 energy user. This weekend, everybody went crazy. Oh, it's so inefficient in terms of energy. No one was talking about this last year, the year prior. And to be honest, people do not care about privacy or the environment when they can make profit. That's retail traders included. China is number one. USA is number two. But it is a considerable threat that we have to consider when mining. 592 on Tesla. I called it a couple of weeks ago. If Tesla gets to 480, that'll be another decent spot for you guys to start to build a position. If you're holding for long term, trading has considerable risk. So does investing. Please hold for the long term. Some of you have been telling me that you want the best entries on the planet, and I've been giving them to you. So please take a moment to write in chat just one stock that you want me to give out for free for tonight, where to get in. I got the question, is BYD worth investing in? If you don't have it, please put it on your watch list. Yes, it is definitely worth investing in. And on the stock club call tonight, I'll give you guys the price of where to jump in. I'll touch on this really quick. I know some of you are starting to say that you don't like reading. If you don't like reading traditional books, audio books is fine and speed them up. And if you can play them on 1.5, that's better. I want to tell you this. A man with no knowledge is the easiest person to rob in business. I need you to arm yourself. The more information that you know, and everyone has a unique gift or a unique insight. Like, to be honest, like when I got on live, after we started doing Market Mondays, I get on and watch Trap. I don't think there's any retail investor on the planet that's better at fundamentals than Trap. Not one. Like, I would get on and be marvel, be like, oh my God, like, thank God that's my guy. We're not competing. Right? I think when it comes to entries, I got the best entries on the planet. I think Troy and Rashad has done the best, and they're showing you in real time how to have several assets working for you at one time. And that gem that he put out this morning about a certain amount of doors, certain amount of coins, certain amount of shares, fire, you guys need to go implement that. But until you begin to arm yourself, you're always going to be at the mercy of someone else, and I do not want that. I told you guys before, Square is the new JP Morgan. I'm going to give you a hot take. I think GM is the Microsoft of electronic vehicles. Everyone's trying to see who's going to surpass Tesla. Sometimes you have to invest in a number two and be happy. And I don't like many automakers, but with all the competitors that are there, GM is going to be a solid number two or number three in the space that's going to do well for a long time. And I want to touch on this really quick about Elon and his history in South Africa. So anytime I post about Elon, someone's like, yo, but his dad owned a mine and he used the people in South Africa. And that's true. I'm going to say this again. There are no Fortune 50 companies that have a clean history. You guys are telling me this and arguing with me about this on an iPhone, and the materials gathered from, or to make the chips that go into the iPhone, are gathered by children while wearing J's. And we've known for decades that Nike has used child or slave labor. There is no such thing as 100% clean capital that does billions of dollars per year. I hate to break it to you. So yes, I know Elon family has a different history. I also cannot take away the work that he's done since 1999. And also, I want you guys to stop looking at people as deities and gods. Even when I met some of you this Wednesday, you're like, I look up to you, you're the GOAT. I'm like, I'm a normal person. The only thing I did was choose to look at this for hours a day for years. You have the same gift inside of you, but there is no clean capital if they're making billions of dollars and being real with you. Here are the 6 principles to master the market. And I put this out in 2017, but I think it's more relevant than ever. Number 1, do not lose money. I know somebody's going to say, how do you do that? By investing in assets that have a low probability of losing money, right? Number 2, don't forget rule number 1, which comes from Warren Buffett. Number 3, for my traders, only take trades that will not lose. We all know a trading setup, whether it's a breakout, mean reversion, We got a double top Head and Shoulders. We got a couple handle pattern doing a prime time that we know is going to win. The biggest mistake that we make as traders is taking trades just because we want to take one. Shout out to the dream team. That's why I tell you guys, take perfects only. Rule number 4, compound your contracts or stocks after you have mastered your strategy. So at some point you have to scale. So if you're trading futures and you're only trading 2 contracts or 5, you're capped in how much you're going to make. So I'm going to challenge Dream Team. I need you guys to start compounding your contracts. Like go from 4 to 8, 16, 32, 64. And then for those of you that are buying shares, if you buy 100 shares at a time, when it gets to an ideal position, you have to go 200, then 400. And then once again, going back to Troy and Rashad, you're seeing them double down on content in real time. We'll start off the show like, listen, we got this today, this tonight, this pod. You're seeing them compound once they have a system that works. Please put in chat, compound when I have a winner. Until then, don't do anything. Number 5, focus on a long-term portfolio. Even if you have huge gains in your short-term account, go look at the billionaire list that I talked about on Forbes. There are no traders on there with the exception probably of Paul Tudor Jones. That's 1 out of millions. You have to have your money work for you. And rule number 6, never give up more than 1.6% on any one particular trade. The 5 regrets of the dying. I'll touch on these real quick and we get my guy Matt on. Number 1, you wish that you had the courage to live the life that you want. I want everybody to put in here, what is your dream life? Number 2, I wished I hadn't worked so hard. Man, I can't lie. Like Wednesday hanging out, I'm like, shit, I got to do this more. Like Troy, let's set up another meetup. Go on a meetup tour because we need balance. And truth be told, I've never been at a funeral and thought about doing more work. There's a place for hard work for sure, but there has to be balance in there. Number 3, I wish I had the courage to express my feelings. And especially as Black men, we have to do a better job of saying, bro, I'm sorry. Bro, I messed up. Bro, can we talk? Opposed to harboring and holding these feelings inside. Number 4, I wish I stayed in touch with my friends. We talked about this last week on the Stock Club call. I know some of you are leveling up and you're thinking like, man, my friends aren't leveling up with me, so I need to leave them to the side. That is the biggest mistake you'll make. There is no business book or Excel sheet or amount of money that will make you so happy that if you lose your best friend that you've been cool with since 1991, that book is going to hold you tight and be there for you. Friends and friendships and relationships are the real equity that matter the most. And number 5, I wish that I had let myself be happier. Everybody put in chat, I deserve happiness. Every single one of you. And I know everyone's fighting a battle and going through something, but we all deserve to be happy. Trading tip of the month. The only testing that matters is forward testing. So sometimes we'll get a strategy, let's say like the 72. And kudos to you that have been doing the homework and you're like, yo, I went back 10 years to see if this will work. Okay, great. The only test that is really going to matter is will you fire when it comes to that spot on a 72? And will you take a number of trades, 20 or 30 trades to test it out? What happened in the past is the past. The thing that matters is your own personal execution when you have a strategy. So that goes for indexes, tech stocks, volatile stocks, futures, etc. You have to test your strategy going forward. And kudos to Michael Batnick. I wanted to show you this stat that I thought was really fascinating. So this is the 10th time since 2017 that Bitcoin was at an all-time high, then fell 30%. So we talked about Fibonacci retracements before, but you can set an alert at the high at 30% or a 40% drop and then buy there. Please do that because these drops are the best times that you should be looking to buy for the long term. And then to my givers, once again, I was talking to my guy this past week on Facebook, Tom, and the crazy part, he said, man, most people won't execute. I used to try and give away Ethereum, VET, and Cardano for Christmas, and he told me 8 out of 10 people turned them down. Please write this down. Please, I'm begging you. Almost all assets work if you hold them over 10 years. And I'm still not a fan of crypto. But for those of you who are sending me messages like, yo, look at Bitcoin versus S&P over the last 10 or 20 years, there's no comparison. Hold your assets for a 10-year period and things will be a hell of a lot smoother for you. The thing that I am seeing considerably in our culture versus others They keep telling us to focus on making money fast, when the real gem is that you end up making money fast by holding for a long period of time. You don't see Cuban, Novogratz, Winklevoss twin, Burry, anyone talking about taking a 1 or 2 year trade on anything, because they know that the majority of the profit is going to come in year 3, 4, and 5. Please don't get tricked out of your spot. I love you guys. If you enjoyed it, put some fire emojis in chat, and let's get my guy Matt on here with that immaculate haircut on here. Appreciate y'all.
Outstanding. You looking like Steph last night, man.
Yeah.
You know, trying to keep my job, you know. Who else is Steph?
Steph, for sure. Yeah, great presentation as always. Let's get Matt
Thank you.
and Quiana Watson. We can't forget Quiana Watson.
Quiana put some people out of business. I got a homegirl who was like, yo, you know her? I had to move out of Atlanta. She was taking all the business.
Yeah,
So I was like, dang,
Quiana,
quiet killer.
she got the game on lock. Shout out
Absolutely. And a very kind soul too.
Yes,
Absolutely.
yes,
Absolutely.
yes. One of our favorite alumni. There you
Matt,
go.
you still ain't told me where you got that background from. Who I gotta pay?
Yo, Tukes is right here. He hear you.
Tukes. Johnny, how are you?
What's good, y'all?
Event, ladies and gentlemen.
Dream team.
A star-studded event. Miss Quiana, how are you?
I'm doing wonderful. How are you?
Good.
It was a pleasure meeting all you guys again. Seeing you again in Atlanta was a wonderful vibe.
We ran into you randomly. This Atlanta's so crazy. Like we literally was just in some restaurant,
some sushi spot.
I'm like, that's Quiana right there.
Yeah.
She was walking down the street.
I said, Miss, can I take a picture of you, please?
And I was like, oh my God, there they are. Listen, Atlanta, I told y'all it's time for y'all to come down here. I said that.
The energy is amazing. It feels like New York in 4 years ago. Yeah.
Right. Oh, and it was so good meeting you. I'm like, oh, here he is.
I'm honored. I'm honored to just soak up the wisdom. Seriously.
You're consistent. I love it.
It's a dope vibe. So yeah, so we could jump right into it, but I'll give a quick introduction. MG, the mortgage guy. I'm pretty sure you guys are familiar with Matt. Man, Matt's been around for years as far as I say the leading authority on mortgages and lending online. He knows everything when it comes to all of that stuff. So Matt is an extremely useful resource. And Quiana has been on the live podcast and a regular podcast. And she's a great friend of ours. And she's probably the top realtor in Atlanta. Definitely one of the top realtors in Atlanta.
She putting people out of business.
I got doing my best. I'm just doing my best.
Let them know, Queen.
She got the game on lock. She's a superstar realtor. So it's interesting to have her perspective because a lot of times we don't hear from realtors and people that's actually selling the homes. And they're the people that's probably has their post on the thing more than anybody. Like, you know, they actually know what properties are selling, what areas hot, you know, all of that stuff. So we couldn't have a real estate conversation without, and they are the newest signees to EYL network.
Yeah.
Yes.
Rants and gems.
Yes.
Rants and gems, baby.
I'm proud of you.
Podcast debuts June 2nd, right?
Yeah, June 2nd, Wednesday, 6 o'clock.
6 o'clock on Earn Your Leisure YouTube channel, all podcast outlets.
Yes.
It's going to be the #1 real estate podcast
for sure
in the world.
Hey, I remember, Matt, when you were on in February and you announced that you're going to be doing the podcast and you're going to have a partner. I took a screenshot and people were just saying, I hope it's Quiana.
Yeah, everybody was asking that.
Yep. I was like, yeah, we got something for y'all.
Yo, I'm gonna keep it real with you guys, man. You know, we've been talking about me doing a pod for I don't know how long. You know what I'm saying? And I've been like, yo, I don't know. I don't think it's right now. Let me just chill. Let me wait. And when it came down to having a co-host, man, I could not pick a better co-host than the queen of the mother effing South, Quiana Watson. Yeah. You know what I'm saying? Because, and I'm gonna keep it real with y'all. Me and Quiana, we talk all the time. And when me and her talk, it's like an hour plus conversation off rip. You know what I'm saying? And we love red wine. So you know we gotta have the red wine on every conversation going.
Right.
So we get the red wine flowing. Next thing I know, we both 3 bottles in on FaceTime. You know what I'm saying?
I came up with some power plays though. Power plays.
And Quiana, she's just been dynamic for years on social and real estate. I mean, she's just been killing the game. So why not have a real estate agent, a real estate broker owner,
Appreciate that.
you know what I'm saying? My bad. And, a mortgage guy like myself, why not us do a podcast? Because like you said, we have our thumbs on the market for real. The real estate brokers and the loan officers. We know what's happening because we're dealing with the transactionals. We're dealing with the consumer. So what better co-host to have than the Queen of the South?
Yeah,
There's a lot of power in partnership.
Yes, sir. Shout out to Ian too, man. Ian's my guy, man. He came at the
I
bar,
appreciate
man.
you.
We had some good drinks, good conversation. Shout out to Tony. Good time at ATL. Shout out to all the earners. Y'all see what it is. Big earning season right now.
Oh, yeah.
You know what I'm saying? It's earning season, pandemic season too. Let's keep going, man.
Listen, y'all up. I can't even front. I was at that event like, whoa. I mean, so much love, love, and so much education. I just love seeing us win. And everybody there that I ran into, they were applying the principles that you guys are teaching. And that right there, I mean, so many people say they want to learn and they show up, but they don't execute.
Yeah.
Y'all got some earners in here. They're executing, and it was amazing.
Big earners in the building in ATL this past week. The big earners. Everybody in the building was big earners. And shout out to all the financial literacy community for pulling up too, man. That was all love, man. So
That's
many. It was $1 billion in that room. Easy.
I agree.
That's a fact. So
Big
let's jump right into this. Quiana, I'll start with you. So you was telling us what we was eating as far as, I know Atlanta is our second biggest market and our second home. And we got a lot of love in Atlanta. And I'm sure a lot of people in this chat right now are from Atlanta or thinking to move to Atlanta. So can we talk about the Atlanta real estate market right now?
Sure. Atlanta, we are really on a really fast pace to growth. So let's just talk about it. Across the country, there was a 15% growth in the real estate market. That's across the country. However, in USA Today, they had an article about 3 cities that actually grew over 18% in the real estate market through COVID. And Atlanta, Georgia was on that list. It was actually Atlanta, Georgia, Durham, North Carolina, and Austin, Texas. What I want people to realize is that Atlanta, unlike many other cities, yes, we're experiencing inflation, but Atlanta, we're in the middle of a growth spurt. When I moved to Atlanta, 2006, 2007, they said we were going to be the Black Hollywood. So keep in mind, we're just living up to that promise. You earners are coming here, you're earning these, you're making them earnings, and you're driving the price up. So Atlanta, we are in a phenomenal market, but we have historically low inventory. So that is that's the thorn in our side as a real estate agent. If I had the inventory from 2 years ago with the clients I got today, it'd be real up and stuck right now. All right. But at this moment we have, so, just to kind of add some context, so I want to educate you guys. When you're having 12 months of inventory, you're really pretty much in the buyer's market. You come down to 6 months of inventory, then you really get closer to that neutral market. We have 1.2 months of inventory. So that's 1 month, 1 year, 1 month, 1.2 months. That's not even a full month.
Yeah.
We have no inventory to actually support the number of buyers that we have out here. So that's driving the price up. It's simple supply and demand, and it's pure economics. Anyone here can speak on that. So we have more demand than we have supplies, driving the price up. It's good, but it's not so good. You know what I mean? So I would say Atlanta right now, if I was looking to invest in Atlanta, I would tell you to do it now, because right now is a great time to invest. So you can take advantage of these price increases. People are, getting amazing equity returns.
Yeah. So one of the things that holds people back, and not just Atlanta, but you can speak on it, is interest rates. And I know they were pretty low at one point during the pandemic. I know they've kept up back over 3. What's your outlook on interest rates, and what are you seeing? Are you seeing people doing 15-year conventional loans or 30-year conventionals? What are you seeing? Are we buying in cash out there? What's going on?
You want me to take this, or you got this?
I can tell you, the money is outside. I mean, I hate to say it like that, but most people are doing a 30-year fix because the interest rates are so low. But I'm finding more and more cash buyers, and we used to see that a lot in the lower price points, like $200,000, $300,000. I'll tell you, the other day, a home that one of my buyers lost an offer on, it was listed at $657,000. It sold at $770,000 to a cash buyer in Alpharetta, Georgia. So I say that to say, I'm noticing more and more cash buyers. I just reviewed an offer for one of my agents, and she just lost an $800,000 house to a cash buyer. So our cash buyers are relocating here to Atlanta. Atlanta is actually number 4 on the list for the best place to live in the world. So keep in mind, you have DMV, you have California, you have Miami, all these places are coming here because no matter how our prices are, the cost of living in Atlanta is still better than all these other locations.
Yeah, this reminds me a lot. My bad. Go ahead.
Go ahead.
No, go ahead.
No, this reminds me a lot of 2007. So Alpharetta and Norcross was like on fire.
Yes.
Properties were like 400,000. What are some of the best areas in Atlanta to invest in? And do you see any similarities from 2007 and 8 to now?
The only similarity that I see is the demand. We have a lot of demand and a lot of people purchasing, but that's the only similarity, because then we had a lot of inventory back in 2006, 2007. So we were able to actually help those people buy those properties. In this particular climate, we have no inventory. And on top of that, there's so many more lending restrictions. You just can't walk in a bank and say, hey, I'm a millionaire. My credit score is 700. Give me a house. Now they want your blood, your sweat, your tears, your husband's blood, your dog's
Unless you
blood.
come in with cash. Yeah.
You know, you can't just walk in there. There's so many layers. So you can't do that. But the areas that I see that I think that most people really want to pay attention to is the part of Marietta that's by the Brave Stadium, that's 30039, if I'm not mistaken, but that specific zip code where the Brave Stadium is, Brookhaven 30319, it is
It's popping.
It's popping because it's right outside of Buckhead and it's not overly saturated. So you want to go there. We also have the Westview, West End area, which we saw significant growth with them last year to the point where the mayor put a hold on permits because the prices were increasing so much. And a whole lot of modern builds are being built. So anything within the city of Atlanta, yes, East Atlanta 30317, West Atlanta 30318. West Atlanta is really, really growing because they've created their own city within the city, and that used to be Bankhead. You know what I mean?
Yeah. Bankhead. Shout out to Quiana.
Shout out.
But they got the belt line, right?
Yes. Yes, so the Atlanta Beltline is attracting so many people, and it's really adding that convenience here, because that's the only thing that we didn't have. You know, we didn't have the convenience of the Beltline. We didn't have that indoor-outdoor living, but now we have that in Atlanta, and it's growing significantly. More restaurants, more buildings are coming here. It's just amazing.
No, that's a fact. Matt, let me ask you first 2 questions. I want to get your take on the interest rate question, since you're in that world. And then also, I hear mortgages for second homes are skyrocketing right now. So what's your take on those 2 different things?
Yeah, absolutely, man. So interest rates right now, I would say for the loan applications that I see, I'm seeing more 30-year fixed than anything, right? It's just, to me, the most cost-effective way to purchase a home versus going to a 15 or 20-year mortgage. So most of the applications that me and my team see is all 30-year fixed, right? Interest rate wise, FHA still at an all-time low. Depending on property type, loan amount, you can be anywhere in that 2.625% range, maybe to like 3%, just dependent on credit scores, property type, and loan amount. But rates are still extremely low. You know, conventional mortgages, you know, high 2s, low 3s, again, depending on credit score, property type, loan amount. So rates are fairly still low. Still at historical rates. Money is the cheapest it's ever been over the past couple of years. So definitely don't wait, don't hesitate, in my Troy voice, because it's here today and gone tomorrow. Now, as far as mortgages for second homes, I mean, this is, you know, happening all over the country because of COVID, because of the pandemic. People can work from home. People are making more money because they're investing. So now you have these luxuries where you don't have to stay in New York 24/7 to go to work. Companies are now embracing people working home and working on Zoom. So now you have places like Miami, for example, their luxury market with second homes is up 101% year over year. Like, it's absolutely insane right now when it comes to this, right? And over the past 11 months, mortgage applications for second homes are up over 178%. You know what I'm saying? Year over year, and it's on an 11-month straight growth streak. So it's absolutely incredible. This is the time for those who have money to be able to go ahead and buy second homes. You can use these second homes as Airbnb, so they can serve for a 2-for-1, right? When you go out of town, you can go visit, you can stay there with your family, your friends, or whoever. And when you're not there, you can Airbnb it, and it can pay for itself. So it's a double-edged sword, so to speak. So those second homes, look into it, people, man. I mean, you got so many good areas, Poconos, Miami, whatever your budget is. And if you're dealing with vacation areas, especially now, America is reopened. Look at the CDC. They finally going to open up New York in 2 days. You know what I'm saying? Like, CDC is saying, forget your mask, go outside, live la vida loca. You know what I'm saying?
Future. Somebody put future on right now.
Mask off.
Matt,
Be careful.
But be careful. I'm gonna still be outside in my mask.
Yeah,
I ain't
my
gonna
mask,
hold y'all up.
It's interesting with Cuomo. He got in that scandal, and all of a sudden he's lifting everything in New York. So be mindful.
We can hang out all night now.
Matt, well, he was in that event in Atlanta. There's no point in ever wearing a mask again.
Bro, I was terrified. I'm like,
yo, I ain't gonna hold you up. I was kind of nervous, but then,
I was
my sisters are texting me like, "Where's your mask? Where's your mask?" I'm like,
I got cursed out. My dad
heard about that.
My dad cursed me out, man.
I heard about that.
Mine's coming tomorrow, and my mom said, "You was out there with no mask in Atlanta."
I'll get in my pocket. That's a fact. Matt,
I'm like, what can you do?
The best. Even posted a picture. He looked so miserable with that mask in his hand. Like he was just like he was peer pressure to take it off.
Because I want to be personable and talk to people and not be rude and keep the mask on. But I'm like, if these spores get in my body, I'm gonna be so mad. Like I'm on I Am Legend. Like, what you doing out here, Fred? Man, I'm gonna be upset. No, it's a blast in Atlanta, man.
They had the Corona cleanse out in Atlanta. Shout out to everybody in Atlanta that kept the Corona.
Shout out to ATL. Wakanda.
On this. Shout out to Atlanta. We kept the economy moving, okay? All of y'all was in Atlanta all last year. Quit playing. We was the only thing over.
That is a fact.
Guilty. We're guilty of it. MG.
Yo.
One of the major issues during the pandemic, obviously, was the mortgage forbearance. And the biggest problem was that tenants didn't have to pay rent for a period of time. What's the update with that? Are we seeing the numbers have crescendoed, or are we seeing a decrease in that?
Yeah, so I mean, everybody thinks the market is going to crash. And one of the reasons they think the market is going to crash is because of everybody who had to go into forbearance agreements, right? And I tried to tell people a year ago, like, look, that don't mean anything. They're going to do everything in their power to make sure that these people don't foreclose. But if you look at the data, right? if you look at the data, as of last week, forbearances are down 11 straight weeks, right? That's number one. So people are exiting these forbearance plans and paying their mortgage on time, which is a great thing, right? The number of borrowers in forbearance is now 2.1 million compared to last year when it was over 4 million people, June of last year in forbearance. Half of that is now out of forbearance and back to paying their mortgage. Now, if you look at how many loans are in forbearance, Fannie Mae and Freddie Mac, which is basically conventional mortgages, have about 2% of their portfolio that are in forbearances right now. Ginnie Mae, which houses FHA loans, has about a little bit under 6%, about 5.61% of their total portfolio in COVID-19 relief forbearance. And then if you even look at private money, portfolio loans, private label securities, that's right around 8% that's currently in forbearance. So when you look at these numbers, right, as a whole, and you're talking about conventional and FHA mortgages, I mean, you're talking conventionals under 2.5% of their portfolio in forbearances. Like, that is nothing compared to the grand scheme of things. So for the folks out there who've been waiting for the forbearances and I'm gonna see what's going to happen and blah, 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 let me tell y'all what's going to happen. And mark my words, clip this shit, Rashad, and I'm telling you what's going to happen. Those folks who want forbearance, a great percentage of them did not need to go in no damn forbearance. They manipulated the damn system as they should, right? Get what you got to get. And those people, and I'm telling you because a lot of them are big earners, and they was in the building talking to me at the ATL private EYL University event saying, yo, Matt, I saved up 100 bands. I saved up 50K. I saved up 75K. I'm now getting out of forbearance. I have enough money to buy 2 investment properties now. What should I do?
Mm-hmm.
People, Now what's going to happen? Now all of these folks are going to come in the marketplace with all the cash that they didn't spend on mortgage payments. They're going to throw all that back in, all that money on the back end of their mortgage, and they're going to have all this capital now to come into the market and compete with all the first-time home buyers, which is only going to do what, guys? Continue to drive the prices up. So don't think because you see all these people in forbearance and et cetera, don't think that people are struggling out here. People are out here getting money. Now, there's a lot of people who are not getting money. I'm not trying to overlook those folks. There's a lot of people who struggle, who needed this forbearance assistance because they lost their jobs, et cetera. But there's a large portion that didn't really need it. They just took advantage so they could go ahead and make other plays. So I don't think there's going to be a crash because of the forbearances. Now, as far as evictions and foreclosure moratoriums, June 30th is the day. June 30th, 2021. That is the day it's supposed to expire. But I personally think the Democrats are going to kick this down the can, probably a couple more months. You have certain cities and states that have their own moratoriums that supersedes what the government is saying. So if you're buying investment properties, please do your due diligence, know what the state level requirements are for foreclosures and moratoriums, because I think like New York is a moratorium to August, right? If the federal government says now you can evict and foreclose New York, you still can't do it. So you just got to be mindful of these things and do your due diligence on a state level or county level if you're buying investment properties when it comes to, these evictions and foreclosures.
Matt, I got a question for you. So what are the advantages of paying your mortgage off weekly opposed to monthly in terms of interest? And then what are the signs of a bubble and what you would say, okay, things have gotten out of hand, we probably are going to have a crash?
So if you pay your mortgage bi-weekly, you're paying bi-weekly payments, you can pay off your mortgage in 22 and a half years if you pay bi-weekly. So you're saving on the long term of interest, but make sure you're financially able to afford to pay your mortgage bi-weekly. A lot of people are not able to do that. And if you're not, you can essentially do the same thing by just making one extra principal payment annually on your mortgage. Now, tax season is here. The deadline was today. A lot of you filed your taxes. A lot of you are going to get nice refunds. If you want to beat the interest trap, so to speak, and pay down your principal, you can use your tax refund every single year. Just pay an extra principal payment towards your mortgage, but make sure you specify that it's two principal balance only. Because if you just give the bank money, they're going to put it to what they want to put it to, and they're going to say, oh, you just paid us 3 months in advance on your mortgage payment versus paying down your principal balance. Now, as far as a bubble is concerned, this market is really tough to kind of predict a bubble, in my opinion, because there's so much unknown still. Like, we really don't know how these numbers are going to look when people actually can start getting foreclosed and evictions on. But I'm going to stick to my guns and tell you guys probably 2023 is where you're going to see some sort of correction. Maybe summer, third quarter, fourth quarter, maybe third quarter 2023.
Yeah, I'm thinking summer. Yep.
I'm thinking when it's going to start happening, maybe late third quarter, where you're going to start seeing some sort of correction that's going to happen in the marketplace. Quiana, you want to jump in on this one too?
Yeah, because see, that's where we agree to disagree on that point. And that's just because I'm doing so much research on the market. So let's be mindful. I was reading this article. So let's not even talk about resale opportunities. Let's talk about new construction opportunities. They slowed down on building right now to keep up with the demand. Right now, they would have to build 4 million houses. On average, the United States was building 1.1 million houses a year up until 2014, and they slowed that down to about $700,000 a year. So 700,000 homes a year. So we are down 300,000 homes per year leading up into this time. Now, and we're also experiencing what is a lumber shortage. Lumber costs are up 250% and rising. And rising. And I can give you guys an example. I have clients under contract with new construction, which for me, it was like the safe bet in this crazy market. Now you have builders in the middle of contract coming back, raising prices 30 and 40,000 in the middle of contract to make up for the lumber shortage, to make up for the cost that they're incurring. So when I look at it from just a simple standpoint of look at the demand of people, look at the supply, look at the amount that it's going to take to build these properties. They're saying basically every new construction property now, even just on average, is costing at least $40,000 more, $36,000 to be exact per property. So when people think about a correction, I want you to think of a correction to be a slowdown. As that means a little less demand, a little less 15, 20 offers to every house. But a correction to me is not the price is going to go from 800,000 to 400,000. Right. I just can't foresee the market making that type of correction with the cost of building costing so much. You know, you can't tell me, you know, that's the thing about it. You can't tell me back in the day I could get a double Whopper for $1. Now it's $4. McDonald's is not going to go back and take it down to $1. No, if you could pay it then, you're going to pay it now. So when you look at inflation, I actually just put this on my page. When you look at inflation, the last time we experienced this was in the 70s, right? So in the 70s, there was an 11% growth in inflation. Most people thought it wouldn't last. So you went from being able to purchase a house for $23,000, it went up to $53,000. We're in the middle of inflation. And when the market does correct itself and when it does slow down, the price is still going to be up. You know, I just think the demand is going to be a little less. I feel like we're going to have a little bit more inventory and it's not going to be so cutthroat where if you're asking for $500,000 for your house, I can give you $500,000 and I can walk away, as opposed to you asking for $500,000 and I got to give you $600,000 just to be competitive. That's what I see, because the numbers don't substantiate it. We don't have enough inventory.
Also, I want people to look at this too, right? Quiana gave great examples. Home was listed for $650. It sold for $770. I think you said.
$770,000. Right? I got a screenshot. I'll post it on my story after this.
Make sure y'all go to Quiana Watson's IG page and see that in the stories. But let me tell you this, right? That 770 is now the new comp. So when people are saying, hey, I don't want to overpay and the home prices are ridiculous, you got to understand, every home that's closing above price is being recorded at that number. The recording does not say the home appraised for X. The recording only says it sold for X. So understand, everything that's closed this year are comps for people who are going into contract in September, because appraisers are looking back 6 months. So these prices, guys, they ain't going to get no lower. Yeah. So you might as well jump in right now.
Not for the next couple of years. Yeah.
Not for the next couple of years. There will be some sort of correction like we all agree on at some point. Yeah. None of us have a crystal ball, but at some point.
I do, for the record.
My bad. I forgot. Ian has the crystal ball because he'll tell you down to the cent. You know what I mean? And be spot on about that ish. Ian, let me borrow that one day. We need that.
I got you. If you give me the background, I got you on a crystal ball.
Bro, I already gave you my barber. What else you need from me, Ian?
The barber and the backdrop.
I think that's a fair exchange for the crystal ball.
Yeah,
but
we got two questions. Yeah. Well, first of all, there's 6,200 people on YouTube right now. Appreciate y'all. If you could take a second.
Appreciate you guys so much.
Like the video, we greatly appreciate it. It's helpful. Quiana, so there's a lot of people that are trying to buy homes for the first time. So you as a realtor, what are some tips that you can give for first-time home buyers? Like, what should they have in order? What are some common mistakes that you're seeing for people that's buying homes that just may not be knowledgeable of like what to do and what not to do?
I personally think some common mistakes are, one, you're choosing the wrong real estate professionals to represent you. Shout out to I say that, shout out to my agents. I say that to say, because when you get the right agent, they know how to finesse your offer in such a way where you'll win. Oftentimes you think it's all about, oh, I just got to spend over the purchase price. And a lot of times it's the relationships. A lot of times it's also other parts of the offer. So when you're meeting with your loan officer, don't just get pre-qualified. At this point, you need to be just a little step further than being a pre-approved as well. I need you to have gone through underwriting. We need to be able to give you a very short contingency on your finance, 7 days or less. So that way your financing contingency is in place to protect you. Under normal circumstances, we could do 21 days, 30 days financing contingencies. Nobody flinches. In this market, they're looking for 4, 5, 7 day financing contingencies. That means when you choose your lender has to do the work up front before you actually even get to the house. They're going to have to really dig into your financing up front and do a lot of upfront work when really it's hard to do because we're all busy, but you got to find a lender that's willing to put in the work so you can have an attractive offer out here. I think that we want to just delete seller's contribution from your conversation.
They're about to get at you, Queen.
The sellers are not. They're not doing it.
I was watching it.
I was seeing it blink out. Like the sellers aren't contributing. So you just can't. The sellers aren't contributing to the closing costs because they don't have to. You know, and I think that we miss the mark because we think that they're supposed to, where in reality, the rules say they can. That doesn't mean they have to do it. I can contribute and I am going to contribute is two different things. So if you're competing against 5 different offers, and I want to break it down in layman's terms, if I'm trying to sell you this apple for $5, right? And Troy, you told me to give you $2 to buy my $5 apple. But Rashad, you said, I'm going to give you your full $5. And then Matt was like, forget both of them. I'm giving you $10 for this $5 apple. I'm going to Matt. And that's how the sellers are looking at it. You know, and a lot of times I think we're forgetting that the sellers are in this to sell their property and become earners. They want to earn. They're trying to make money. So get you the right agents and help navigate, and then also make some sacrifices. I feel like a lot of times that we start, you know, you got this idea of a certain specific house in a certain area with the picket fence and the pool. And I think that we have to step back and say, you know what, let me look in different adjacent areas that may not have as much demand. That way you can be more successful in your endeavors to purchase a home, because it's going to be the hottest house on the block and the top rated school district is going to be very difficult for you to compete against. So let's just kind of navigate and just say, you know what, owning a property with the way that appreciation values are throughout the country is much better than renting. So let me change my expectations and get somewhere adjacent so I can own a property and just make that first step towards building generational wealth.
Let me add on that one, right? So Quiana said the inventory is at 1.2, 1 month, 2 days of inventory, right? Yeah. So for you first time home buyers or anybody that's out there in the marketplace, stop looking at new listings. Number one, you need to start looking at listings that's over 30 days because something's wrong with that property. There's something happening. There's a reason why it hasn't sold or under contract. So number one, those are the properties that you guys should be going after. Number one, days on market. Pay attention to that. It's on every Zillow listing. Your realtor can provide you that information. That is a key. If you see anything above 60 days, that might be your opportunity to get in this crazy market. Number two, Quiana's speaking more about the retail market, right? When you're going to have those shiny houses, those swim communities, et cetera, et cetera. You guys got to stop looking at the retail market and go to the distressed market. Go to the market where, hey, in that neighborhood, in that swim community, there may be a home or 3 that may not have all the updates that you will want. And now you have to use rehab loans, 203Ks, Fannie Mae home style, whatever, you pick your poison, right? So now go ahead and get the renovation and mortgage in one loan and get a fixer-upper. Those homes, from what I'm seeing with my business, my buyers are winning their offers because there's less competition, because people are afraid to do renovation, to do rehab. They don't know they can get the rehab money. They think it's too expensive. They need to move in tomorrow versus being a little bit patient and moving in a couple weeks or a couple months. That's where you guys want to play at. If you want to get in this market, you have to start thinking like the investor and stop playing where everybody else is playing. When everyone is going right, you need to go left.
Absolutely.
You know what I'm saying? And there's opportunities out there. You just got to have patience and have the right real estate professional, like Quiana said, that has their pulse on the market and know how to find these properties.
Can I share a secret real quick?
Go ahead.
If a house is worth 100 and Matt bids 125, and then like Quiana said, if Rashad bids 150, everyone write this down. That is called a limit up. I'm gonna share a secret. There's a reason why I started with The Big Short. The number one market maker right now in the rental community and buying of these assets, Blackstone, JP Morgan, Berkshire Hathaway. So when I've been telling you guys for all these months, you need to learn how to invest and how to trade, because guess what? The easy gains came out of the stock market. Now, where did they go? Real estate. So now, that's why I always tell you guys, it's not one or the other. It is both. I'm always say it. I'm telling my dad, I messed up. I should have listened. He was teaching me this. Some Boys in the Hood was out, and I did not listen. I'm like, I don't want no properties for $800 a month. And I'm like, I could have had 80 properties by now. It's both. But now the biggest players in stocks and investing are buying these and pushing these prices up. The reason, if interest rates go up in 2023 and they have to readjust their books, be careful, because if they let these properties go that they are then renting and they go into all these other tranches, or they flood the market because of a crash, an opportunity will be there. But I want you guys, even when you're buying a house, you have to know who the market maker is. Elon was the market maker for Doge and partially Bitcoin. The hedge funds are the market makers for real estate. Trust me, they have both down to a science, real estate and the stock market together. They are not separate. They are a team.
Great.
Oh yeah.
Let's get some questions from the public. I'm sure that they got a lot of questions in regards to real estate. So yes, EYL University, you guys have access to some Zoom. So
shout out to the earners.
Yeah. Shout out to all the earners in the building.
Yeah, Pearson, what's going on?
That tip in. I wrote that down.
I'm happy to help.
What's going on, Pearson?
Hey, how's it going? Can y'all hear me?
Yeah, we hear you perfectly.
Yeah, good evening. How are you?
Thank you. Thank you. It's been a while. I've been trying to get my question, but hey, I appreciate everything y'all do. And I honestly have a question for Ian, actually.
Okay.
I've been studying this risk that you've been talking about, like systemic and unsystemic, and I've been reading this book called The Great Crash in 1929.
Okay.
And you mentioned something about studying recessions, and I'm like, okay, let me go look at these recessions. So in 1927, Henry T. Ford shut down the plant in order to start reproducing the Model A's, if I'm not mistaken. And my question for you is, what type of risk is this? And also, in the near future, do you see any company be able to have the same effect that the Ford plant had in causing a mini recession like this?
Yeah, that's a great question. Any company, technically, if this does not go well with Tesla, with what's happening in China and then being squeezed by the Chinese government, they will be the fall guy. So in the same way Bernard Madoff got blamed for the crash, he wasn't the sole person in that, because he was chairman of NASDAQ. You guys can go read on that. If Tesla falls apart, and Tesla historically does drop 50% from its high, that's why it was so tough to hold it pre-Kathy. Kudos to Deborah. Like, we would buy Tesla and it, like, man, it would cut 40% in 2 months. And if they do not get the stuff under control and revenue is strong enough by 2023, they will get blamed for the crash. And that will start a trickling effect. But great job on doing the research. I do think, since Matt and the Queen is here, you should ask them something, because it then ties into the real estate market as well. But absolutely amazing question. And then, of course, if Microsoft, Apple, Google, they ever have any big issues, they will definitely, like, if Apple falls apart 20%, it would destroy our economy for probably a 1 or 2 year period as well. But that won't happen.
When you asked that question, Ian, that's the first company I thought of. I'm like, it would be Apple for me. If something drastic happened to Apple, the wealthiest company in the history of our country, that was,
as my grandmother would say, it's all over but the shouting at that point.
Yeah. We're in trouble.
Now Matt's it's like
down goes Matt.
It's like musical chairs.
The last one.
All right. Right.
Last one is standing.
We need to invest in a battery company. I do. Goodness.
Oh man, let's go to
coming back.
On now.
We can hear you, Matt. We just can't see you. Tim, what's going on? You've been unmuted. Unmute yourself.
What's happening, people? What's going on?
Everything's
good. How are you?
I'm good.
Great. Listen, I don't have a real estate question at the moment, but I do have a question about when to exit a stock. I know you talk about entry points a lot, and I think I got that down packed. Thank you, Ian. Thank you for all that. So I'm trying to figure out how to exit my position.
Okay, I'm gonna ask this in the form of a question back to Quiana. If I bought something in Alpharetta, let's say I bought 3 single family homes that are 3,600 square feet in Alpharetta in 2007, when should I get rid of them?
Oh, you bought it in 2007, you have 3? You want to get rid of all 3 or just a few? I would say at the very least, I would keep 1. I would sell 2, get the net proceeds from the other 2, and then use that as leverage to purchase more.
How long do you think I should hold that one primary one?
Honestly, it just depends. Alpharetta is moving on up. I will hold it in this specific season until the end of this year and let's see how volatile the market is, because we are predicting some market corrections. And if these are just investment properties, you want to buy and hold, and you have to sell at the top of the market before the correction comes in 2023.
So to answer your question, brother, she just told you the answer. So if I've been having that since 2007, like a 13 to 15 year period is ideal. I know some people are like, hey, I know Josh was talking last week about sometimes you don't know when a company is going to last 10 years or 15 years, but technically, if you are in a good stock, you don't want to sell it. The same people in 89 and 90 and 96 was like, yo, it's over for Apple. The same articles get reprinted every 4 years. This is going to be the Coca-Cola killer. Monster beverages and good and da-da-da. Like if I'm talking to you one-on-one, if you are investing in the top 20 company, I would hold it minimum 20 years. You mean to tell me you think LeBron can play 20 years, but a stock can't survive 25? No, but everybody wants to flip. But once you get to year 10 and it's still rolling, the money on the back. And that's why I always say, like, when I go back to 2005, when I was in college, in 2004, I've missed out on millions of dollars not investing $1,000 in the market in Apple. And people like, yo, I didn't have it. Y'all had refund checks. Y'all blew them on Jay, just like I did in threes. And, I was wearing Versace and Prada and I thought I was stupid. That's what I was stupid. Had I put man, I would have been Donatella and Gianni right now had I put that shit in the Apple. Yeah. Wow. So hold it for, if I'm talking to you one-on-one, 20 years minimum, man, if it's quality.
Wow. Okay.
Appreciate you, Tim.
Right,
if it's a trash company, 366 days.
Long-term capital. Hey, Matt, real quick, because I see a couple of earners had this question about forbearance. Is there any effect on your credit score? Because some people were asking, does it affect, is there any legislation that says that, and how would I go about getting my next property if it does?
Yeah, no, if you're in a COVID-19 relief forbearance, then no, it should have no bearings on your credit. So a lot of people went into some sort of forbearance prior to COVID-19 before all these laws came out, and those people unfortunately got affected. But if you took out a specific COVID-19 relief, then it should have no bearings on your credit scores. Now, once you come out of forbearance, you have to make 3 consecutive payments on your mortgage, and then you'll be eligible to refinance or even purchase a new property with no damage to you. So the forbearance, in all honesty, really didn't hurt people. There was in the beginning, it was a lot of uncertainty about what was going to happen. Even me, I put out a video saying you should kind of wait before you do a forbearance. If you really don't need it, don't do it, because who knows? The banks are always out there to get you. But I gotta give it to the government and give it to the banks, man. They really stepped up and really tried to help as many people as they could, especially if you were a homeowner. They kind of bailed out people who really needed to bail out. So if you're in a forbearance, come out of it, make 3 consecutive payments. And if you stacked your money, now you have the opportunity to go invest. If you have equity in your property, you can do a cash out refinance without a problem, and get some equity, pull some of that equity out and go buy real estate. So the forbearance didn't really hurt people. It actually helped a lot of people, get back on their feet. I can't tell you how many people paid off all their bills during the forbearance, and now they're debt free except for their mortgages, because they were able to take 6-7 months off of paying their mortgage. So it actually helped out a lot of people.
Yeah, best in the business.
They didn't do it because they were nice people. If they wouldn't have, it would have bankrupted our country.
No, let me be clear. They did it because they had no choice. You know what I'm saying? Like, this is what I tell people all the time, Ian. This crisis is different from the subprime crash. Subprime crash was because of greed, ultimately. Yes. This pandemic was health related. It was nobody's fault. Well, if you ask Trump, he'll probably tell you something different. This was nobody's fault. So how can you blame the everyday homeowner whose job just got shut down and people were dying and getting sick and in the hospital? It was a scary time in America for a couple months, right? So kudos out to the government for doing what they had to do and stepping up. No matter who you're a fan of, Democrats, Republicans, it don't matter. We're all human at the end of the day. And I thought it was a good thing that happened, that they stepped in and did what they did.
Nice, nice. Carrie Ann, we coming to you. Unmute yourself. You've been unmuted. What's going on?
Hi, Miss Quiana. How you doing?
Hi, how are you?
In the chat, I said you had that wealthy Black woman accent. It's like I'm just gonna let her talk and just wash the poverty away from me because her voice was like amazing.
Well, thank you. I appreciate that. How are you doing today?
My question to you guys was, you just talking about forbearance, and when they mentioned that in the chat, I was thinking about like how we have the student loan issue coming up. So if you take that into account, right, how do you think that will affect the market as far as the people that were able to not pay student loans, right? They got that break. They also weren't able to pay their mortgages. I think at some point that's got to come to a head. So for me, not being a homeowner right now, I keep hearing 2023. So I'm like, all right, so I should just keep stacking my money, keep buying my stocks until 2023, and then have that lump sum ready to jump into the market. Is that a good strategy?
It's the finesse for me. I'm gonna let MG take that one, but one thing about student loans is they keep changing these laws and how they want to count these student loans against you when it comes time for home ownership. And I can see them making another change because of the amount of people with forbearance to still open the doors to home ownership. But I'm gonna let MG take that one.
Yeah, I think student loans are interesting topic.
Yes.
It's definitely hindering a lot of people from qualifying, especially if you're trying to go FHA and you're in deferment. But there are options, man. You can go conventional. People think, FHA is the only way to go when you have student loans, and it's not the case. Just go conventional. And if you're in an income-based repayment plan, and if that documentation states that your payment is $1, the bank will use that as your payment for a conventional mortgage. So student loans don't hurt nobody, only if you're trying to go FHA. Now, I do believe the government at some point will be forced to do some sort of forgiveness, because what I personally think is going to happen, people just going to say, F these student loans, we ain't paying them. We don't care what you say. And they're going to have to come out with some sort of forgiveness, some cancellations, something, because the student loan market is probably going to be the next thing to crash. I think student loans are on the clock. Sally Mae, you on the clock, baby.
Like, it will be the greatest crash in the history if they let it happen.
On the clock.
Navient too. Let's not forget Navient.
Yeah, Navient's on the clock. The federal student loans, they pushed it back to September. So I actually have student loans, and so they obviously in forbearance to the end of September. So I'm just waiting myself. Like, obviously no interest is a great incentive if you decide to pay it, but like they said, what the administration said, there's going to be some forgiveness, whether it's 10,000 or up to 50,000. I'm waiting to see.
And also, it's one of these things that all investments work the same way, where they all come down. They all come down. But the problem with trying to time the market, whether it's the stock market or real estate, is that you could be waiting for a long time. So like when I came into the business of a financial advisor in 2007, I came in during the recession. And at least in New York, that's the last time real estate prices was really dropped drastically. So they will drop again, but let's say you were waiting for a drop after 2007.
Oh, baby. Yeah,
you would have been waiting 14 years to buy real estate in New York, because it hasn't really had a significant, we've had drops, but not a significant drop like it was back then. So yeah, it might come next year, or it might come in 5 years. So you might wait 20 years for that to happen. Same thing with the stock market. Like, if 2007 was a perfect opportunity to buy stock, and then last year was another perfect opportunity. But in between that, the stock market went up. We have pullbacks here and there, but we didn't have a major crash. We didn't have a bear market from 2017 to 2020. That's 13 years. So if you were waiting for a bear market to invest money in the stock market, you would have been on the sideline for 13 years. So I say that to say, yeah, nobody wants to buy at a high, but sometimes in life, you just have to realize that depending on what your goals are and what you're looking to do, you could be potentially waiting for the perfect time, and the perfect time's not coming anytime soon.
Oh, that's so true. The cost of waiting is going to get really expensive for a lot of you all. I really think so. I think the cost of waiting is going to get so expensive, because when you look at the timeline of what the corrections and the predictions of the market are going to come, I mean, I'm not sure about you all, but sometimes it's not that deep. Sometimes it's not about, I think we all get caught up in, I want to be an investor. Sometimes it's just buying that first house, living in that first house, bettering your situation, bettering your financial situation, and then a couple of years from there, being able to turn that first home into a rental property and pull the equity out and buy something else. It doesn't have to be that complicated. You know, I have clients that do this every single day. All they did was just buy their first house. Now today they got $100,000 plus equity. They're pulling that out, and now they're able to invest because they're more educated. They've changed their financial circumstances, and they're in a different space. So sometimes it's just buy the first house and not think that you're waiting for something detrimental to happen. Because when the market did crash in 07, 08, let's also keep in mind what also crashed: jobs.
Absolutely.
Jobs went away as well. So you guys are waiting for the market to crash, for the real estate market to crash. And at that same time, your job could be in jeopardy simply because you're waiting for something like that to happen.
And you won't be able to get financing.
Nope.
100%. And I 1000% agree with everything Quiana just said. But I don't think you guys really understand what you're asking for. You know what I'm saying? Like, you don't want to see a market crash. You don't want 08, 09, 2010 to come back around. Trust me, I was in this full time. You don't want that. People, real people, like, yo, we're humans. First things first. And when people lose their house, this is a family that lost their house. So you gotta really be mindful what you guys are praying for. You know what I'm saying? Like, real people got hurt. And we gotta stop being savages at the same time. Yes, there will be opportunities. Yes, we want to pounce on those opportunities, but really think what you're asking for, man. You're asking for people to families, not people, families.
You're asking for families to be put out.
Yes.
Spousal abuse goes up.
Yes.
Domestic violence goes up like crazy. Suicide rates go up. Murders go up. Like, I know you guys are looking at it from the lens of a good deal, but there's a lot of blood on your hands when these crashes happen as well. It's not fun.
No.
It's not fun. So please be mindful. And last year, like, if you were scared to buy stocks last year in March and April, you for damn sure won't be ready to buy a house in a crash. And unless you're bringing all cash to the table, then they're not going to clear those deals.
I agree.
Yeah, that was a terrible time. You know,
lending guidelines were crazy.
I moved to Atlanta by myself in 06. No family, no friends, nothing. 07, I got my real estate license. 08, 09, I was like, oh my God, it was tough.
And gas was high as hell.
Gas was high.
I was on 400, like, dear baby Jesus of Nazareth.
Oh, shit. Atlanta gas right now looking like 09. Like, that joint was damn near $5 to fill up.
I'm scared to leave the house.
Yeah, the gas prices.
Carrie Ann, we thank you for your question. We appreciate you.
Thank you.
Thank you, Carrie Ann.
Thank you. Thank you, Carrie Ann.
That is a fact.
Let's see.
Carrie Ann asks some great questions every time.
To have money on the side if you can, if you're fortunate enough. Shout out to Rose. That's something that he spoke about. That's something that we always say as far as, you know, opportunity. When opportunity presents itself, you have to be prepared. And you have to be prepared with knowledge, but let's be honest, you also have to be prepared with capital. And then you have to be prepared with credit also. Shout out to them 500. And there's different other ways how you can be prepared, whether you take equity out of your home, things of that nature. But when the opportunity comes, because you never really know. Like, we could have never predicted that Corona was going to happen. We could have never predicted that. You know, it's like a lot of things that happen in life sometimes you don't know. But the victor is the one that's prepared, because sometimes in life you never know. It's the same thing with content. I told Wall Street Trapper after he did his episode, I said, you got a fire, but now you got to throw gasoline on it. And
yeah, you told me the same thing.
Yep, that's a fact. And then when the pandemic hit, I told Ian, I told Trapper, I told everybody that would listen, I said, you got to double down on content. And that's why we started Market Mondays. We didn't know Market Mondays was going to become the #1 stock show in the world, but
no, I didn't know that.
We prepared ourselves by actually doubling down on content and putting it out. Who knew it was going to blow like that? But if we wasn't prepared, if we didn't have the infrastructure in place, then we would have missed an opportunity.
That's a big fact. Well, opportunity needs preparation, man. It's a fact.
Yeah, you got to be prepared years before too. Like, I know some of you guys want to buy stuff in a crash. Start doing your research now for 23. And it may not happen in 23 because the Fed may continue to print money. And with the student loan thing, that's the scariest one of all, because it's going to cause $100 trillion in damages.
Yeah. Dominique, we coming to you. Unmute yourself. You've been unmuted. What's going on?
Hey guys. Okay, my name is Dominique. I'm from the Houston area. I'm a realtor out here. And I heard Matt speak earlier about the rehab budget that they can work in. My biggest issue right now is I have a lot of clients with a lot of pre-approval letters, which again really don't mean anything if you can't find a product to partner them with. And so I have a lot of them looking at homes that are outdated. The issue with it is I don't know how to direct them as far as the rehab side of it. And I heard you speak about it earlier. So I just wanted to know if you can expound on it.
Oh yeah, man. I love rehab loans. Rehab loans, I've been originating them for years. And I think it's just the smartest way to buy real estate. Especially if it's going to be your primary residence. You know, I'm a firm believer of getting an ugly house on the block and making it, you know, one of the best. So you force that appreciation. The easiest way to guide them, to be honest with you, is to get the Homebuyers Blueprint Volume 2, the rehab pack.
That's a good segue.
Which is going to teach them everything that they need to know about rehab. I mean, everything you need to know, which drops this Friday, 5/21. Shameless plug. I had to do it.
that segue was seamless. That's great.
It was
I had to do
trying
that.
to get the volume 1, and on my message, I always message you. You always text back, so thank you for that. But I had sent a message just to get the first one, but I don't have the link, and I don't know how to get it because when you watch it on the platform that you guys created, it doesn't have the link that's attached to it below like it does on YouTube. So I get kind of turned around on how to utilize that.
So only thing you got to do is just email Janet. If you want to get access to the blueprint volume 1, email Janet. Troy, what's her email?
Janet at Earn Your Leisure.
Janet is the GOAT. I love you, Queen. You are amazing.
Shout out to Janet. So you can email Janet and you can get volume 1, which is the encyclopedia for home buying, the A to Z. Over 100 videos, 15 plus hours of content, plus weekly webinars.
You got them talking points down.
Don't he?
But you know, rehab, to get into rehab is a great way to buy. You know, the thing about rehab, people fear it because they don't know. They fear the unknown, right? And if you just got to get your buyers comfortable with the idea of rehab. And you have to get them in front of contractors. You have to be able to visually show them befores and afters, you know, because once people start seeing, wait a minute, this outdated piece of crap house was once this, and now it's this, then they get excited. They're like, wait a minute, I can do this for how much money? And when you look at, you know, 50,000 in rehab, when you look at the dollar amount, it's probably a difference of $100 a month, $110 a month in your mortgage payment.
Yeah.
So it just makes all the sense versus you spending your hard-earned cash on rehab. You running up your credit card bills, which is not tax deductible. Now, if you listen to him 500 and all his gyms, then you can leverage those points and everything like that. But from a tax benefit perspective, the IRS is just looking at this as mortgage interest. So it's all that rehab money is tax deductible at the same time. So what I tell folks, especially those who are using FHA financing, if you're using FHA financing, you might as well just go get an FHA 203K because it's there for you. It's available, and it's one of the rehab loans are one of the most underutilized products that are out there in the marketplace because people are just not comfortable. So all you realtors who are watching this, learn rehab. I'm telling you, your business will 10x if you start understanding these products.
And Dominique, selfishly, I'm in Houston, so if you need a client, I am looking for some investment properties. So,
and Dominique, we are looking for properties in Houston too. So we rather do business with our earners when it comes to buying real estate. So if you're earning and you in real estate, please email us your listings. We would love to work with you.
Yes. Ian@joinrepanda.com for listings.
You have a question for Quiana while you have, I know you're in the same industry. So
yes. I actually was going to tell Ken, I actually have a client that is moving from Houston to Atlanta, and he was looking for a realtor. I didn't know a realtor that was there, so I posted the question in the chat on the EYL platform, but nobody ever responded. So his name is Quentin Outley. He works as a financial advisor for Lexus out there in that area.
I'm easy to find. Quiana at KianaWatson.
Okay.
Contact me. Between myself, my team, we can definitely take care of him. I appreciate the referral, Dominique. I just relocated the whole family here from Houston.
Everyone's moving to Houston, but the investors, I have plenty of them I work with, but I was so glad to connect with you guys because it's a whole different way of processing. So thank you guys for everything you do. Janet, I always email you. We talk almost every other day, seem like, but I just emailed you again for the blueprint.
Yeah, and if you need
Janice
help with any
MVP.
clients on rehab or anything in Houston, I lend in Houston, I lend in Texas. So, I'm here to help you.
Your team is actually amazing because I literally text
You
them
better,
like every
you
other
better
day.
say that louder for the people in the back. You better talk your ish, girl. Go ahead and give them some rants and some gems right now.
They are amazing. Like when I tell you, I text them almost every other day and they respond within like 15 hours. Like my clients love them. Like I have 36 clients I'm working with and they are just, they love it. They love everything about you guys.
Let's go.
Keep going, Dominique.
We open for business, baby. Pandemic.
Yeah, and Dominique, drop me your email, please.
Will do.
That's crazy, man.
Oh, you gotta love MG. You gotta love
Yo,
MG.
we don't got enough likes on this video. FYI.
Please like it. Please like it. Please
Even
like
if you're not the
Go
biggest
crazy.
fan,
Put
please
some
like.
likes on this thing. Put some likes on it.
MG and Quiana Watson, the best in the business. We only bring you the best at Earn Your Leisure.
Ransom,
Yeah, she's amazing.
Appreciate it.
When I met Matt, I told him that he was going to become the leading authority on mortgages online, and I saw it, I could see it, and he has fulfilled that, and I feel like this is just the beginning. Matt has a bright future ahead of him, and when I first met Quiana, I just followed her online before.
Yeah, Quiana was a star day one. You can get on her page, day one, like, yeah, she the one.
Quiana was a Carrie Bradshaw of real estate.
I got something to say.
That's a fact. She changed the game a whole lot. I told her, like, a lot of realtors, I feel like, have followed in her footsteps, especially in Atlanta.
What's the one thing they missing?
Listen, well, they may have followed my footsteps in Atlanta, but I'm teaching them too, I got my online training courses on Agent Tools for Success. So if you want to learn how to market and brand yourself, put yourself out there, but also be educated so you can really win these offers for your buyers and get more seller clients and really navigate this business. That's what you want to do. You want to go visit Agent Tools for Success. We got about 200 plus people in our membership group. So
really quick on my open mode. Yeah, on my open mode. What did you do to help get your brand to be number one? Because like you put, and I say, and they've told me I can tell you this, but you moved a lot of people out of Atlanta from doing real estate.
Let me tell you.
So what are some of the things that you did to grow over the last 3 or 4 years?
I think a lot of agents, they get into this business and they just want to buy and sell real estate. They just want to help people buy and they want to help people sell. They don't double down on the marketing aspect of branding themselves. So I always tell people, like, when you guys said you were out here putting out consistent content, you knew something was happening and shifting in the market. I came into the business like, I'm putting out consistent content. I'm doing content every month. I got photo shoots in the back pocket, videos, and I make sure I send them to Matt like, yeah, I'm dropping that next week. Everything
do.
Intentional. It's intentional and it's on purpose to build my brand, because what I recognize is marketing is marketing. So I use my marketing to attract my clients, but when they come to my page, you can't deny my level of knowledge. I take the time to actually read articles, to do market research, to understand what's moving and shaking in the area. So I'm not just here to help you buy and sell an asset. I'm here to educate you on the appreciation values of your asset, how this can help you build generational wealth, and how this can be a stepping stone for you changing the trajectory of your life. So most agents don't do all of that. Most agents are like buying and selling real estate. That's all they know. They're not taking the time to do so. So building that brand, being polished, being exactly who I am, coming into this as a marketing person. I'll give my degree back, but I do have my MBA, and I'm a business person. So I recognize that we needed to make real estate interesting. Let's make real estate something that people look forward to hearing about, and here we are. And I'm consistent.
How much content are you putting out per day or per week?
See, for me, it just depends. If it's, I would say I don't have to post 3 times a day. I put impactful information out there, but I would say during a week span, I'm putting out at least 10 pieces of content, at least. And we're about to up that with us dropping rants and gems. So I got Matt with a suit on. I done made him cut his hair. Like,
you looking good, man.
You're looking good. He got to get ready. So I think what it is I think most people think I want to post 3 times a day, where you have to make impactful content, not just throwing out information. Because what I tell people is I can post 3 times in one day and it not make an impact. And I can post one video that is going into the psyche of my audience And that makes a huger impact than posting 3 pieces of information. So take the time to learn your industry. And then when you do put out information, make sure when you say something, people look forward to listening to you because they know you have something valuable to say.
Amen.
That's a fact. And welcome to the new Death Row.
Just right.
Welcome to Death Row.
Minus the Suge Knight management.
No, I love you guys. I'm so grateful. When MG brought the opportunity to me, I was exploring several opportunities, and we were talking. I was just like, we're talking so much. I mean, especially in the middle of we've been having these conversations, like in-depth conversations, since March of last year when COVID happened. Me and Matt was like, all right, what's the plan? What's the plan? You know, we're really trying to figure out because we were unsure what was going to happen in this market. And we just doubled down and we started to talk more and more about the market and how we're shifting the culture. And at the end of the day, it was organic. And I'm so grateful to be here because I've seen you guys grow, and I love that you're educating our communities, and people now are really focused on building generational wealth. They're educated about the market. They're educated about their purchase. And that right there is changing the culture forward. So it's an honor and a pleasure to be with you guys.
Yeah, shout out to Emmett on YouTube. He just said that he was at ATL takeover last year, and it changed his life when he heard you speak. So shout out to Emmett.
Oh,
shout out.
Yeah, I almost forgot about that. Yeah, yo, we outside is back outside now. we need to do another one. It was amazing. Even from that standpoint, and the market was so different then. I could talk to you guys about programs that were really working. Now we're just in a different market, but you can see those that did attend that. You can see if you missed a little, you missed a lot. So if you didn't pounce on the opportunity then, that opportunity is now gone. Now we're in a whole nother market. So really think about that and execute on your vision for your life. If that's selling real estate, if that's doing both, like Ian said, you need some real estate, you need some stock, you need to do both. And you need to execute.
And well, honestly, I was talking earlier with somebody, we're the only culture that gets told to do one or another.
Yeah.
Everyone always does both. Like you ask anyone or any other culture, whether they investing in, it's always business, stocks, and real estate. Always.
Yeah. 100%. So look, I want to say something about Rants and Gems, right? We will be the #1 podcast in the world. Period. Right? Troy, Rashad, Ian, I love y'all. But I'm coming for your spot.
Listen, there is no competition.
Right? I love y'all.
We got some tricks up our sleeve over here.
I love y'all.
We're
coming for it.
We're coming for it. I mean, I'm ready for it.
I would love that. We actually, you know what? I think we're more quality control than Death Row. We're like,
I like that.
I like quality control.
But I want to say this. For all the earners, right? We got something special for y'all. Right. So when we do this Rants and Gems, like we already filmed a couple episodes. So the first 2 episodes that's coming out, you're just going to be me and Quiana. Right. But I'm going to let y'all in on a little thing right now. I'm going to give y'all a little sneak peek. This is exclusively for EYL University members. We're going to have a live studio audience for our podcast. Right.
You heard it.
Yeah, I heard it. Right. So when the live studio audience will only be for earners. So earners, be on the lookout in the next week for the details, and we're gonna tell you
your mask
when to pop up. Bring your damn mask, your positive, your negative COVID test.
The building. So we're doing a lot of market data, a lot of research. We put a lot into these episodes, so we want to be able to present to you this information and make it conversational, and let's answer your questions, and let's get to it. Oh, it's gonna be a game changer.
Rants and Gems, baby, is gonna be something different, man. So I'm super excited for that, man. Ernest, you're gonna get the information soon. Come.
So you gonna invite me, Rashad, and Troy? So we can pull up and really argue because we was like PC today.
Oh, we were definitely PC, but we're gonna save the versus battle in for the live show.
Yes.
Yeah, me and Shai will be like Swiss and Tim watching it happen.
It's gonna be a vibe, man. So Ernest, this is gonna be, if you're EYL University member, you guys are the only ones who can attend live. Just like how we do it in the Zoom, same thing. Only earners allowed.
Trying to up the ante.
I like that.
The value for first of all, hold on. Let me say something real quick. EYL University is the biggest.
Talk to him.
That's all I got to say.
That's
the biggest.
We're the biggest, and that's
the biggest. Don't get it twisted. The biggest.
They bring everything together, y'all. You guys bring everything together. The real estate talk. You got stocks. You have people getting credit tips, understanding how to build sustainable businesses, how to leverage their assets. I mean, you guys are doing it. I'm definitely seeing a lot more educated people that are entering the market that I speak to. And a lot of them like, oh, you at EYL. I mean, when I made the announcement, I felt like I was getting my chain. Where's my Rockefeller chain? Where's my chain? They were like, wait a minute, but you guys are changing the culture. It's amazing.
Great people, Ian, Wall Street Trapper, you guys. I mean, the EYL tree is blossoming and everybody's doing well. And we all get along too. So that's another thing too. It's like, we all, are friends. We all
it's genuine.
Yeah. So it's it's a Motown, it's a new Motown vibe. It's great to see the Black excellence, that everybody brings something different and everybody is a star in their own right. Nobody's, competing with each other. Nobody's bad. And that's really how we really going to all further this whole situation is competing. And that's something that we did. We didn't take we took the route of including other people. We could have just, me and Troy just been on an island by ourselves, but how far can you only go with just two people? Not one.
You know the type of competition I saw? I'll shout out to Dave Shan, shout out to Ash Cash, who's on the label. I ran into Dave at the event. I said, look, man, Ash did 12 episodes in 2 days. Dave said, he did what? He said, I know why you're telling me. 20 in 2 days. I said, I'm just saying that's what he's doing.
Shout out to both of those shows,
shout out to the team.
Shout out to the home.
And I'll say this for everyone watching at home. If you feel like you have been undiscovered, you haven't been discovered yet, right? And you may sense that we are your competition. Let me help you. We're not, because in our community, I want us to stop fighting. And if someone has a spot that you feel like you have to take it, use the blueprint. The thing I'll tell you all the time, for me, mastery of craft is everything. Because we aren't, like, by us being here, we aren't taking anything from you. I've told a bunch of you this over the last week. It's like, we didn't sit on this mountain to keep people off of it. But if you master your craft, like, look at Matt. Matt knows his shit about mortgages. Quiana has dominated her space. She won't say it. I'll tell you, I have friends that she literally may pack up and leave and go back to Chicago and Milwaukee and shit, right? But that's because of the service side as well. And that's why I was telling a couple of you yesterday, I'm like, I know you want to talk more. I know what my value is. If Steph stops making threes from 28 feet, he's going to get traded. I know if my entry's on fire, y'all going to get rid of me. So I want to focus on the crafts. But if you feel like you are waiting for your time, use this blueprint as motivation, put out your content, help for free, help people get some results. If I made you some money off the Bitcoin or Ethereum, or you didn't think the price was going to drop to where I said, and they worked out in your favor, put yes in chat. This is the secret. Help in advance to get the result. Then you come back and negotiate what you really want on a back end at a premium. But in our community, I want us to stop the little rap war, podcast war kind of vibe thing. There's so much money. And I'm gonna be real, by y'all not wanting to collaborate, you may have ruined the opportunity for us to do something on CBS. Because the producers are watching. Build value, collaborate, because other coaches will collaborate and hate each other. But they'll hate each other and go knock down 300 million, 80 million. So just be the best at your craft. Then someone will find you. Like I was talking to the young boy when I met, I'm like, you start investing at 17, you're 21 now? The stuff that he knew, I'm like, I wish I knew this at 21. Like I embraced him, I hugged him like he was my brother. Like, because it takes one to know one. If you really know your craft, it's kind of like hooping, like you know a dog when you see one. So just be great at your craft. Your time will come and everything will open up. But the hating or being upset won't get you there. Being great and and that's why, like, if you guys can ever get Rashad to give up the marketing plan, oh baby, he won't give it up, and I don't want him to either. But Quiana told you what to do.
I'm learning from you.
Yeah, that's the thing, though.
Hey, you got to keep some stuff quiet because honestly, people will take it and use it against you and like you.
I think my most favorite quote is, if I'm afraid to share what my knowledge, then that means I don't know enough, right?
Talk to him, Queen.
If I can't come out here and give you guys at least the bare minimum basic knowledge of how I built my brand, how I've educated myself and what you should do. I've been out here training agents now for over a year, and I'm still on top of my game, right? So there's 8 billion people in the world. You think by telling someone how to do what you do and giving them advice and also past that, because everybody's going to put their own spin on it. I can give you the fundamentals, but who you are as a person and how you actually connect with your audience, that's
And your character. Yep.
Your character, your knowledge, and your service. Like, we're in the business of servitude. I think everyone up here, we're in the business of servitude. You know, my clients are not working with me because they like my lashes and my hair. They saw
Although both are fire.
They found me. They found me. They saw me because of that. But once they see me and they start to work with me, my spirit, I come from a place of servitude. I want to make sure that we're winning out here. So y'all just got to keep in mind, there is no competition when you're in your own lane. There is no competition when you are actually operating in your own God-given purpose. So I want to make sure I put that out there.
Yeah.
Love it.
Church said amen.
That's
So
a fact.
before we wrap, I want to give you guys the last word, since you are our guest. So I'll start with MG. We'll let the lady finish last. So MG, tell them what you got going on. Tell them about the volume 2 situation, and yeah, how to follow you on Instagram and all that.
All right, so before I get into volume 2, first I want to give a shout out to Bam. Bam just texted me. He hit me with a promo code for EYL merch, Rants and Gems for 50%, Rants and Gems 50 for 50% off of all the EYL merch. That's first things first, right? Shout out to Bam.
Never misses an opportunity.
Bam never misses an opportunity. Gotta love Bam, right? So shout out to Bam because he took care of me. All right, now, the Homebuyers Blueprint Volume 2, the Rehab Pack. Now, this is my baby because I love rehab loans. So the pre-sale starts tonight. I'm going to actually put the link in the chat right now on YouTube for Volume 2. All right. Now, this is going to discuss everything you need to know about rehab real estate and financing your real estate projects using FHA 203K, Fannie Mae Home Style. But we're going to discuss construction to permanent loans and also hard money loans as well. So one of the things that people always come up to me is asking me about lenders and who are the lenders who are funding, not the 203K and Fannie Mae loans, but really more of those investment properties, right? So instead of just doing a boring lenders list, I decided with the Homebuyers Blueprint or doing pre-recorded videos to discuss these products and being real generic about them, I'm going to give you guys what you've been asking for. I'm going to give you a lender list. But instead of just giving you a boring list, we're going to do it as monthly webinars with every lender that I've done business with and more lenders. So every single month, we're going to have a different lender either discussing hard money, their products, their programs, how to get approved, their underwriting process, et cetera, et cetera. So now when you're going into the portal, every single live webinar is going to be a different lender talking about their specific product. There's a lot of lenders that will do national. There's lenders that will only do in certain states and regional. So I'm going to bring all these lenders to the table for the Homebuyers Blueprint Volume 2 community. So that way, now when you're ready to execute, you're going to have a list of lenders to choose from, but also you're going to be able to know about their product, their do's, their don'ts, what they like, what they don't like, et cetera, et cetera. That right there is like $1 million worth of game.
Shout out on Gilly.
So the Homebuyers Blueprint Volume 2, the pre-sale is now live. I'm put the, like I said, I just put the link in the YouTube comments. If anybody wants to get the pre-sale, the course is releasing Friday, 11 a.m. Eastern Standard Time. The pre-sale is for 72 hours only. 72 hours only, and it's almost free. It's $129. It's almost free, almost free. Take advantage, learn the game, learn rehab real estate, learn how to finance it. I mean, we have interviews with contractors, HUD consultants, realtors who specialize in rehab, helping their clients with rehab. Like, I'm going to have so much information in this course. It really should be $2,000. But
Okay, look,
it's $129.
Actually, you and Rashad together. Do y'all frame your talking points together for how to roll out? Because even I want the business owners to listen. How he's stacking the value, that shit is amazing. Like, how do you? Because I gotta go play that part back. I think you dropped 14 or 16 talking points before you reveal price. Can you talk about how you structure? Because learning how to structure and present price is a big thing that most people, and especially on the real estate side, can't. You notice, like, people will come out with the price like, yo, the house 600. It's like, damn, you didn't talk about any benefits of it yet. Can you guys dive in a little bit? How about how you structure your deals to make it irresistible?
Well, I look at it like this, right? I give so much value. I'm the free game champ when it comes to this, right? No one can tell me shit. I'm on Instagram Live every day. I'm on YouTube Live. I don't give a damn. You can't tell me nothing, all right? Because I give out so much information for free on any platform that anyone will listen to while I'm touring the country with envying them, whatever it is. I give out so much information. There's so much value. I'm answering questions every single day, all day long. So when it comes to products, for me, I look at it as the same way. If someone's going to pay for your product, because I pay for products and I get the product, I'm like, this is crap. Why did I just pay for this? Right? So for me, I want to give them so much value where they can't come back to me and say this wasn't worth the money that they spent. I dare anyone in this comments right now to tell me they didn't get value out of Homebuyers Blueprint Volume 1. Because if you say you didn't, you're capping. Because there has not been no bad reviews on the Homebuyers Blueprint Volume 1, because me and Tukes Productions sat in this studio and we put it down, pause, and we made this happen. And we are not sitting here playing around with this, man. I want to give the people information. This ain't no damn YouTube video where you can go search and Google. No, I'm giving you deep, detailed information, hours worth of information. This volume 2 is probably like 6-7 hours right now without the live webinars. You got to understand, this is a lot of information, and people just think it's really just bullet points. No, I'm going to deep detail. So for me, Ian, it's all about just over delivering, just give more, give more, give more, give more. So that way now when the people get your product, they're going to want to share it with their friends, their community. And then now they're going to expand your business that way. So it's referral based. You do right by somebody, they're going to refer you. And that's just how I run my mortgage business. And now that I'm in the product game, that's how I'm running my product game as well. And I'm trying to make it as affordable as possible, because I do understand there's a paywall. Some people may not want to pay for certain things. Okay, great. So I'm going to make it as affordable as possible. So that way you can't say you can't afford this, because this is less than a pair of Air Force Ones.
Black ones too.
I'm from New York, son. We don't do black.
I know. I'm just joking.
Respectfully.
As somebody that's tested the product, you over delivered again, my brother. I told you that the whole Home Buyers Volume 1, and I was like, man, this thing is ridiculous. Like, there's nothing out there like this. You over delivered again on Volume 2, man. Congrats to you in advance, my brother.
Thank you, brother. I appreciate you.
Numbing the tongue as Trap.
Hey.
He would appreciate that.
He would appreciate that.
Yeah. Nah, that's
business owners. Go watch that last segment.
That's a
Rashad, I like how you wrote the answer. Give it. Listen, some stuff you got to keep proprietary. And I'm gonna tell business owners this: you got to be careful too, because you can give your edge away. After all these years, Coca-Cola has not come out and hopped on YouTube and be like, "This is how we formulate Coke," and give away this $1 billion formula. But business owners, go look at how he stacked the value for his offer. Absolutely amazing.
Well, you got to look at the lender list, like, for crying out loud. Like, who's giving you the lenders?
Nobody.
Not just one lender, two lender. I might do this I could do this every week, a live webinar with a different lender talking about a different product. You guys got to really understand what I'm giving you right here for this pre-sale price.
Yeah.
Like, it'll be crazy not to get the Blueprint Volume 2.
The Black Air Force Ones, definitely wore Black Air Force Ones.
Nah, that's how you about to do a crime.
Low top, never did it 3/4.
Nah. Who is it?
Low top?
Low top.
Yeah, we ain't. Yeah, ask that one's on the way this summer, by the way.
Slight plug. Yeah, for sure. Mine's is in the stash. Let's go.
Slight plug.
Yeah, sure. All right.
Oh, real quick. Quiana, you got the floor, and then I'll end it. Yeah.
Oh yeah. After Matt did all that, No, mostly I can tell you, I have my online courses. One thing about it, I had so many people ask me how I built my business, how I was able to create my platform. So on my online training courses, we have Agent Tools for Success. I have the blueprint. And my blueprint teaches you how to structure your real estate business from A to Z. Most of you jump out here, you start selling houses and you don't have the right foundation for your business. And we're talking from setting your business up to an LLC or S Corp or however that should be, to how you're able to organize in the back end. What most of you see is the front end of my business. What you don't see is my high-end artificial intelligence CRM that I have in the background that keeps up with my 1,000+ clients, that's able to actually automate my systems and have me out here being a superstar that I look like I am. So my systems are automated. I have my CRM, my database is organized. I teach you guys also how to build a staff. You know, so many realtors get into the business thinking they want to be a one-person show, and you can't show the houses, negotiate the contract, attend every home inspection, do all these things and still be successful in this business. Every person that I know of that is successful, they have a successful team. So I have my blueprint that's going to give you everything you need to know how to structure your business from A to Z. Even if you're an experienced agent, I give you my templates. I tell you what my CRM is. You get that in the blueprint, Jonathan. I see that question. I give you templates on how I follow up with my clients, how I keep people organized. We talk about marketing. We talk about branding. I have an entire marketing and branding segment in the blueprint. So that way you can really understand how to figure out your own voice and be that voice for your own audience. Because I'm not trying to teach you how to be me. I'm trying to teach you how to be the best you.
Yeah, be
because
yourself.
if you get your real estate license, it says salesperson. But most people get their real estate license thinking it's customer service. And that's why you fail. Over 40% of agents fail in their first year, but I can tell you the people that are a part of my Agent Tools for Success online academy, they are thriving in this market. And I highly encourage you to go watch our academy, our award ceremony. We recorded it. We actually celebrated a lot of our members our first quarter, and we had the best quarter yet. So you have that. And if you want to take it to a next step up, what I do offer is membership. Everybody asked me to be their mentor. They want to see me. They want to talk to me consistently. So I created our online community, which is our Agent Tools for Success membership edition. We meet every single week, sometimes twice a week. We give so much value. What I do is a first session, I always give you guys a mindset session, because I can tell you if your mind can see it, then you can achieve it. Most of you fail to realize that most successful people are disciplined, and they're disciplined their mindset just as much as they discipline their skill. So our first week, we always have a mindset session. Second week, I bring in expert trainers. MG came in, did a training for us. I had Rashana Scott. She came in this month and she did an investors training, but not just how to be an investor, but how we can represent investors. I mean, I know we can't really talk about how much we get paid, but just know as a realtor, and I can't say how much we get, but you can actually make triple that if you represent investor clients correctly. And so she came and taught a course to our Agent Tools for Success membership. And then we will move forward with me. I do my master classes every single month. I'm giving you a master class on how I'm able to be successful, but not just I'm successful. You see the success of my other members. You see the success of my agents. So we're moving forward. So the numbers don't lie. You know, we're going into this quarter and not just counting what's going on with Watson Realty, because it's only 4 agents and we're already over 20 million. So I'm just trying to explain to you, if 4 agents over 20 million, we don't have a huge corporation. So we're all on track to over exceed our goals. And right now we actually have over 20 million under contract, because we're working on a lot of new construction, because that's where we find it to be easier. So if you want to learn more, if you want to be motivated, but if you also want to get real tools for success, then you want to come on over to Agent Tools for Success membership. It's an online subscription. You pay the membership every single month. Right now, I got to give a shout out to my consultants. I had to get them to give me a discount code for you guys. Everything on the website to be 25% off. And I have master classes. So I have a how to brand yourself master class. I have a 2-day marketing and branding class. I have a class on how to represent buyer clients. I also have a class on how you're able to manage your CRM. If everybody wonders what CRM do you use and how do you manage your clients, I have an entire masterclass on that as well. Every little detail you need to know to run your real estate business effectively and efficiently, I've taught a class on it. If everyone's wondering how is my team structured, how do I pay my team? I think a lot of times we don't recognize that in real estate, you have to pay a team. You have the difference between a team and the difference between your support staff. Your support staff is in place to support your business. You pay them. Your team is in place to generate a residual passive income to you, but most of you guys miss that mark, and you're not you're not the rainmaker of your business, so you're going to consistently be in the car. So if you're tired of being in the car and you're ready to get behind the desk and still collect your checks, I need you to come on over to Agent Tools for Success.
From a marketing standpoint, look at what she did. Intelligent, poised, background amazing, lashes fire, hair fire. Ton of value, right? Gave a whole bunch for 95% of the time. Pitched at the end, but even the pitch business.
I love it.
Yeah, but look at the end, how she framed her pitch. Business. So a lot of the times when you're like, yo, I have this for sale, there's really no benefit in it. But the way she stacked her offer is absolutely amazing. So outside of the investing gems that you guys, this is really a business show and business school masquerading as only stocks. Go replay her part. And for the Black women, look how comfortable she is in being Black and being herself. That is an asset in itself. Melanin leads to money, right?
It leads to money. That's the quote of the century right there, Ian.
That's a fact. If you're a
Mike, chop that up.
Definitely. Troy.
Yeah, now I was quickly. I mean, we didn't do our earnings report, so I'll rip through it as fast as possible.
Real quick.
So it's day for retail. We got Tuesday for Walmart, Home Depot, Baidu. Wednesday we got Target and Lowe's and TJ Maxx. Thursday, Kohl's, Ross, and BJ. And Ian, really quickly, I was on the record. I think this time last year, saying that Macy's was dead. But boy, was I wrong. It's on a tear. It's been up 260% year to date. Wow. So shout out to Macy's and anybody that was Macy's. I was wrong, and I'm here to say it. I was wrong.
It's still trash. Should have go to $21.90 and then slide back down. Shopify and Target, Walmart. It's 1,000 other retail spots.
Yeah. I was on that one. I'm just putting it out there. So shout out to everybody that was in.
Now we appreciate you guys. Ian, I'll let you get the last word once again. But shout out to Matt and shout out to Quiana. Best in the business. We look forward to having them on the network, and I'm sure that they will have the #1 real estate podcast in the world. I'm excited to check it out. I can't wait to see the product. And thank you guys for trusting us with your show. And yeah, let's make history.
Yeah.
Ian, I'll let you get the last word.
To everyone that I had a chance to meet and talk with in Atlanta on Wednesday, I'm honored. Troy Rashad, Mike Bam. Sorry I didn't get a chance to talk to y'all till like 2 hours, an hour and a half in. But I appreciate you guys so much. Everybody in Red Panda, I love you. Stock Club call as soon as we wrap up here. Matt, Quiana, you guys are absolutely amazing. I'm honored to have been able to meet you. And everyone watching on YouTube, I'm here to serve, here to give, and here to make this easier than it was for me when I got started in 08, 09. So if there's anything that I can do better, let me know. But melanin leads to money. Invest and hold for 10 years. And if you have an asset that's good, hold on to it for a lifetime.
There you have it, ladies and gentlemen. Take care.
Love is love, man.
Yeah, we'll see you tomorrow. Tomorrow, we got a dope, powerful episode coming out with Francis and Quay. Jay Who?
Yeah, Francis and Jay.
Yeah, check that out.
Adam 22, stop reposting their content like it's yours. That Corday interview was fire. They won't say it, I will. Stop that. Go tag them. It's their content. Because if I did that, you would have cease and desist coming my way. Don't do that. I'm begging you.
You know how that go, man.
I love it.
Comes with being #1.
Unoriginality is at an all-time high these days.
He's a solid content creator, but it's like, come on, you can't put your logo, like, bruh.
You can't put the logo on it. You just taking it way too far.
Stop.
Vlad
wouldn't do that. I'm gonna be real.
Shout out to all the podcasts.
Do better, man.
Shout out to $1 million worth of game. Shout out to Joe Budden, man. Hold your head.
Yeah.
Good guy,
It's
right?
looking real tough out there for him.
Yeah.
No, but even with that, I'm gonna be honest. We as men have to learn to sit down as men and have tough conversations. And for all my business owners, iron out the agreement from day one and make sure everybody understands. Because everybody want to talk about equity. yo, I want equity, I want royalty, I want to do what Diddy did, and you don't put up no money in this shit. It take a lot to run this. Like, I know you guys think it's just Zoom and lights. It costs more than just that. So you can't want all the upside and don't want to hedge and put in any, like we said, I didn't know it would get to this level. Didn't know. I hoped, I prayed. I pitched 25 other people to do a collaboration show. No one wants to hear that from anybody black talking the way that you do about the market. Voila, this worked, right? But you have to also, as a business owner, be willing to put in through good and bad. That's business 101. So kudos to everybody, but I think this is a great business lesson for the business owners too. And Joe, hold your head. Corey, hold your head. I think we have to educate the community about how to do business properly. And if we have issues, to never air this shit out publicly.
Hey, real quick, before this is the absolute last word. Listen, we are not soliciting any type of funds from our YouTube comments. I know a lot of people
or Instagram.
That is not us. We would never do that. We actually ran into somebody who fell victim of that and was surprised that it wasn't us. No, that's not us in our YouTube comments. We've reached out to Rule a bunch of times and still are reaching out to them to rectify that situation. But please, that is not us. Do not sell Bitcoin or trade Bitcoin from a YouTube comment. All right.
The finesses will get you.
Please, that's not us. All right. Love us, love y'all. We'll see y'all tomorrow. We'll see y'all.
Have a good one.
See you Thursday.
Great
Friday,
show.
Saturday. Love us, love. Be good.
Thank you guys. Appreciate y'all.
Appreciate you.
Matt, send me that background. Quit playing with me, boy.